All right. Hello, everybody. Welcome back to another market open. It is Friday, July 12th, 8:47 a.m. We are here back again on another market open. This has been an exciting week, a very interesting week. We've got a lot to discuss right now over the next couple of hours because things have happened in the past 24 hours that have changed the fundamental trajectory of certain companies, also the overall market. And today we have officially started earnings for the banks, and we had JP Morgan, Wells Fargo, and Citigroup report. Two of them did well. One of them didn't do that well, and their stocks are reflecting that. So kind of 2 for 3 in terms of how the market is interacting with those companies. And we also got PPI data. And I think I want to start off with PPI data. The Elon Musk news from yesterday, still very important. We have some updates on that, but not a full conclusion on if the robotaxi event is delayed or not. So we'll talk about that. But I think we start off with PPI because it is very interesting. I'm actually confused. I would love for anyone in the chat to actually help me make sense of the data because I don't really understand why it's happening the way it's happening. But I think we'll start off with that. And then we'll keep going from there and see how that's interacting with the market. Thank you all for being here. Yes, I was 2 minutes late. Okay, I was 2 minutes late. I was 2 minutes late, but I'm here. Dude, the comments when I'm late though, I can't lie. The comments when I'm late are the best things in the world. It's the best thing in the world. His mom forgot to wake him up. You know, it's funny. I went downstairs and my mom, she's like, she works at a school. She's like an administrator. So for the summer, she's home, right? Because in the summer, like teachers, administrators, they don't go to school. They get paid to stay home. They get two months of vacation. And so I came downstairs and she was just chilling, eating her breakfast. And I was like, oh, I'm about to go do my show. And she was just like, are you jealous of my life? And I was just like, wow, she's really clowning me right now because she doesn't have work to do. Okay, so PPI. Let's get into PPI. This thing, I'm confused about this. And I would love anyone's help to make sense of this. PPI came in the highest it came since March 2023. March 2023. 2.6% year over year ahead of expectations of 2.3%. So when I saw this and when I heard some of the analysis around PPI, I thought markets would take a nasty beating because, well, CPI was great yesterday. And if PPI can't really hold up to the CPI, again, CPI came in at 3.0% versus 3.1%, then this is not good, right? Like this is bad. Inflation is not necessarily horrific, but it's like there's a little problem going on with inflation. And small caps said, we don't care. Small caps said, we don't care. IWM is up 1.39%. I mean, it's really beautiful to see. TNA, we never ended up getting those TNA options, but they would have done well right now. This is up 4%. This is triple leveraged IWM. And it's really incredible to see. I mean, any bad inflation data we've gotten over the past 6 months, IWM takes a beating because the argument is, well, there's not going to be a rate cut if the inflation data is hotter than expected. Yesterday's CPI, along with Jerome Powell's testimony on Tuesday and Wednesday, basically solidified, in my opinion, the market's pricing in of a September rate cut. And now the September rate cut is 88% or 94%. It's in the high 80s, low 90s in terms of the percentage chance of a rate cut. So even hotter PPI data than expected could not stop IWM. Nvidia up slightly in the pre-markets. Even the S&P went up 0.17%. So I think the market is saying, hey, this PPI data is not that exciting to us, or it's not like that scary to us. We really don't think it's that big of a deal. Yes, it is hotter than expected, but it's not hot enough to say that the Fed is not going to cut rates. And obviously the reason it's not hot enough is because the labor market is weakening. Yesterday, we saw tons of data around different elements of the CPI that are coming down, and the overall inflation index. And so it's hard for them to use this one metric as a reason to be like, oh, if we cut rates, things are going to speed up too quickly. Now, I'm trying to figure out more in depth why this PPI came in hotter than expected and trying to see kind of what was the core argument, like what was the thing that led it to be hotter than expected. It feels like it was food and energy, but that doesn't make a lot of sense given that energy came down in the CPI. So I'm still trying to figure that out. But regardless of what the reason is, the market doesn't care. The market does not care at all. And so it seems like there may be a chance for the market to still rally on this news, even if it's not the best news in the world. So that's what we got for PPI. If you're just joining, PPI came in at 2.6% versus 2.3%, highest since March 2023. I won't be surprised if that gets revised in a little bit and some of the numbers are changed in terms of how we interpret that. But as of now, market really doesn't believe that PPI is going to be that big of a deal. PPI is the producer price index, so it's how much the companies are paying to produce the materials that we end up paying for. So the idea is if they pay less to make a hamburger, we should pay less to buy a hamburger. And that overall reduces inflation. So yesterday's narrative kind of contradicts a little bit of today's narrative, but the market so far doesn't really seem to care a little bit too much about that. It's already priced. Well, that could other be an argument. It's already priced in. Yeah, that could be another argument that like the market priced in that this might come a little hotter than expected. And the CPI was, again, that 3.0 reading. That's why yesterday I was so happy, because if we had a 3.1 or 3.2, it would have been decent. It would not have been ahead of expectations. This one was, surely ahead of expectations, and it's setting up a 2 handle in August before September. I mean, if we have a 2 handle in August, I think in September the Fed has no choice but to cut, or else it's going to seem like they're trying to induce a recession. And maybe it's like it's going anti-political, like everyone thinks they're in favor of the White House. If they try to create a recession, maybe they're not in favor of the White. Like, it would just be insane for them to not actually cut in September. So I think we will end up getting that cut as long as we don't have inflation reaccelerate in August. Okay, let's transition to Tesla. So yesterday was an interesting day for me. Tesla stock fell from $270 all the way down to $236. In the pre-market right now, it is down as well at that 236 level. And my dad, you guys know, has a $248 average on Tesla, and he's had a $248 average for like a year now. You might be asking, well, why didn't he buy the dip? He was busy buying Robinhood and Palantir, and he was like, and Google. So he averaged down on a lot of really good companies, and he has, he's had a good return on those, but he just never averaged down on Tesla. And every time it got lower, he would just like wait till it gets lower. The classic thing, like, oh, it's at 140, it might go to 120. So we just never got the chance, right? Never got back into it. He finally broke even 3 days ago when it was above 248, and he was like, let's go, we're green. Like, it took a year to get here, but we're green. And then he comes home yesterday. He sees the fucking stock collapse to 236, back below his average after he was green for 2 days. And he's like, dude, what the fuck happened? He's like, what is going on? He's like, I thought we were green. I thought we were good. And I didn't have the heart to tell him. Dad, there was a Bloomberg article that I tried to get Elon to respond to. And we know he knows that the article is out there. We know he saw the tweets. And he just said nothing about this event that probably was never going to happen, quite frankly, on August 8th. And now he's decided to just like stay silent. And the stock market basically decided, well, we're going to punish you if you stay silent. So I told him people are selling Tesla to buy unprofitable companies in the Russell, because technically that is kind of true, right? And the look of disgust on his face, he was just like, what the fuck is going on? He's like, why are people like, he was so upset. He was so mad, but I didn't tell him the real reason. If I told him the real reason, I think he would be even more upset, because he probably didn't even know there was some fucking robotaxi event. But the point is, it is delayed allegedly from Bloomberg. I'm starting to feel like it's not allegedly anymore, because Tesla did not actually respond. And Elon knows that everyone's waiting for a response, but he is not giving a response. The only thing he said over the past couple of hours is that if you everything you should read from the New York Times is 50% false. So he said that to a piece of news about someone tweeting something from the New York Times. So obviously he knows that everyone's talking about the Bloomberg article, but he's not responding to it. It's weird that he can respond to the New York Times stuff, as you can see right here, which is about Elon Musk's Mars project. So he said, look, assume anything in the New York Times is at least 50% fiction. That's fine. But what about Bloomberg? What about Bloomberg? The company that said, hey, you're not going to have this 8/8 event. Ultimately, I don't think it's a big deal if they delay it. It is annoying, though. And the reason it's annoying is because, I mean, this just goes back to the history of how many times they delay the timelines. And look, for me, I'm a big supporter of Elon. I don't really care about delaying the timelines, because at the end of the day, if you're an entrepreneur, like sometimes things take longer than expected. You have to figure it out. And like Elon's the reason we have all the cool things we have in the context of Tesla and SpaceX and stuff. So like, yeah, if it takes delays, it's better late than never. But in the context of the stock, it seems like the stock pumped because of this event, or like the run up to the excitement of this event. or at least people getting more excited about what the robotaxi would look like. And people are saying, oh, it sold off yesterday with the Mag 7. It's like, no, it didn't. If it sold off, it would have settled in at 255, maybe the low 250s. There was a nasty red candle when this news hit the terminal to 242, and then it was just downhill from there because Elon did not respond. Also, when the Reuters news came out, Elon responded to it within 3 hours, and he cleared it up. So it doesn't take a rocket scientist to be like, well, he could have just easily said, this is Doomberg, don't believe them, or fiction or fake news. Any like couple of words he could have said to keep people at ease. He did not do that. And so, unfortunately, that is the scary part. How did Bloomberg even get that information? Well, this is the one thing about Bloomberg. Although they're not perfect, Bloomberg breaks news. Like, Bloomberg has sources. It's a reason they're Bloomberg. I mean, the Bloomberg terminal it's an aggregate of constant news updates, and people pay for it because they believe that news is accurate. So Bloomberg talked to head designers on the Cybercab robotaxi team, and they said, we've been given instructions to redesign what we came up with, which is weird that 2 months before the event, they have to redesign. That means, like, how are the designs not finalized by now? And so obviously that means there has to be a delay. And as a result of that delay, that means that the event itself is delayed. So Tesla right here, 236.41. That is the story. It's down officially 10%. It was down 8.5% yesterday, down 1.98% today. So closing in on 10% here that it's down. And it is what it is. That's what we're seeing right now in the context of Tesla. Uber, ironically, it's down a little bit right now, but it was up 6% yesterday as Tesla went down. So I guess the narrative really is that when Tesla fails, Uber goes up. And when Tesla goes up, Uber goes down. The other thing that was interesting about this is that Adam Jonas, who's the head at Morgan Stanley for Tesla, he tweeted he didn't tweet, but he put out a research note. And in the research note, he passively aggressively said, by the way, I didn't get an invitation yet to the 8/8 event. And so I'm thinking, okay, hold on. How is one of the head analysts on Tesla, like the most bullish Tesla guys, not getting his invitation? And then he's like passive aggressively saying that in his research note to clients, I haven't got my invitation yet. It's probably because he's not going to get an invitation because it's not happening on 8/8. And so it kind of adds up the story with the fact that they didn't even send out invites. Like, what are they going to send out invites on August 7th? Like, no, like if this is a real event, it has to be organized in a real way. I mean, when I went to AIPCon, that was 2 months in advance. I was getting information to like, hey, this is happening. You got to get ready. There's so much structure and planning and logistics that goes on throwing these events. And it seems like that's not happening in the context of Tesla. So here's my question for the chat. Do you think it matters? Do you think it matters? That's the question. And then we'll move on to the banks because the banks had earnings. Ultimately, I don't think it matters, but it's just annoying. And the annoying part of that is what I think investors are upset about. One good piece of news on Tesla, they did get an upgrade right here from Citi. So they increased their price target to 274 from 182, which is a big deal. I mean, Goldman Sachs and Citi saying it's worth basically in that 250 range after the stock rallies like 40%. But still, it is nice to see the street kind of up their tone. They wrote, the analyst has been more constructive on near-term investor sentiment around Tesla, but says the strong run-up adds greater reliance on looming electric vehicle product and artificial intelligence catalysts. The Q2 delivery beat was so encouraging, which prompts increased estimates and supports Citi's underlying call for improving EV sentiment this summer. However, the firm believes core EV fundamentals alone are unlikely to support significant further upside. I agree. Even the margins on those EVs are just not going to be enough to expand the multiple. New products and AI catalysts are going to need to be there in order for Tesla to go up, which is the robotaxi. And that's why delaying this event is so important, because if the event isn't happening, then maybe the catalyst really isn't there. Autumn Soul says, I only think it matters because Elon isn't responding. I agree. That's another thing. I mean, if Elon responded and took it down, then it probably wouldn't matter. But also, if Elon said, yeah, by the way, guys, we have to delay it. Sorry, I need a couple of months. I don't think people would care that much. The stock would probably still drop, but at least people would be like, okay, like, all right, it'll be an October event versus an August event. We'll just like wait a little longer. But him not saying anything is the hard part here. Now, if he's actually just trolling everyone and he wants the shorts to short up Tesla and he's ready to press that red button and say, actually, no, Bloomberg is stupid. Like, we're having the event, here's the invitation. I think the stock can rally back to 270 and it would be really funny. It would be really funny to see that happen. But the odds of it now, I don't know, feels kind of low. As Martin says, the market hates uncertainty. That is correct. They're preparing a proper reply to it rather than just flying it on a whim. But see, they didn't do that with Reuters. With Reuters, they just, and here's the thing, I think they didn't do it with Reuters because the stock was reaching a 52-week low that day. And so I think Elon had to do something because execs were probably like, dude, we really got to respond to this. But now that the stock has run up 80% and it's kind of just hanging there, if it falls 10% from here, it's really for the far majority of people that loaded up in the 160s, it's not that big of a deal. And so maybe Elon's just like, well, maybe the stock needs to go down a little bit more. And, maybe this run up was a little bit too much. Maybe, I don't know. But it does seem like the Bloomberg article probably has a chance to be real. So I guess we'll see. Yeah, but if it's true, they can't just say, yup, delayed. That's true as well. They're going to have to put out a proper press release to actually explain what that happens. Shout out to Matt Money. He says covered calls are coming in clutch to keep the port pretty flat yesterday. Yeah, shout out to covered calls. I mean, I tweeted some analysis on Tesla covered call premiums when Tesla was surging at like 261 or something 2 days ago. And there were a decent amount of people under that post saying, yeah, but if you did covered calls at this way, blah, blah, what are you, the premium, you get your shares called away, yeah. It's like, yes, but it's also like, do you expect this thing to just run up forever? Like, and if you don't, then if you pick a decent strike and collect some premium, you can make some money. So it's not that covered calls are perfect. And on a stock, a stock like Tesla, when it does a run, yeah, you can get your hand caught in the cookie jar. But there are moments where you can be like, well, this is running really quick and anything could happen to kind of derail the narrative. And so maybe sell a few even further out the money call options and collect some premium. And whoever has sold covered calls in the past 2 days have done very well. And they're probably closing out those calls, collecting all that premium. Those who bought those calls. I mean, if you bought, 280 calls expiring today, unless Elon says something like, and whoever sold you those calls and collected a juicy premium for 280 by Friday, which when the stock was at 265, it kind of felt like, man, this thing could run to 300 by the end of the week. The narrative changed. So it is definitely a game of going back and forth on expectations. Gerber would explode if Elon just tweeted delayed. Okay, so speaking of Gerber, and this is why, again, this dude, it's just so hard to be a fan of Ross Gerber here. Like he gets super bullish once the stock starts running, and then he goes back to being, Ross Gerber and saying like, this is the problem with Elon, blah, 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 blah. And so he says, more broken promises. We knew no one at Tesla was prepared or ready to launch a robotaxi, just like the many promises about Cybertruck that never materialized. There goes the Tesla Momo. The thing is, it's fine if you feel like this, but when the stock's running, don't be like robo-taxis, like the mission, everything's going to change, blah, blah, blah. Just have this same energy when the stock's running and be like, hey guys, the stock's getting ahead of itself because we all know this. Like the only reason you say this is after the Bloomberg article. But if you like actually believe that Tesla can't fulfill their promises, say this before during the run-up. It's like you're being like a chameleon, right? You're picking and choosing when to get excited, when to not get excited. And I think that's the part that a lot of Tesla bulls hate about Ross, because he just constantly isn't consistent on his overall bullishness for Tesla. Now, Dan Ives responded, and Dan Ives basically said, hey, this is not that big of a deal. I think he's going to talk more today on what's going on with Tesla, but he said, yeah, a 2-day delay is like, we don't really care. Or like 2-day delay is not that serious. It doesn't change the overarching narrative for Tesla. And so, a 3-month delay doesn't change the narrative. So I guess we'll see. I guess we will see how this plays out. All right, let's talk about banks. So we got bank earnings. Let's get into that. Bank earnings so far, what I'm looking at, were not bad. They were actually pretty good. So we have JP Morgan on the deck. Then we have Citigroup. And then we have Wells Fargo. And the reason banking earnings are so important is because if the banks put up decent numbers, it at least gets us to think or shows us that there is a chance that other companies are going to be putting up decent numbers as capital is stimulated into the markets and banks can give out loans, et cetera. Like things are doing okay. So JP Morgan, they beat on revenue and EPS. So 426 share versus 419. 50.99 billion versus 49.87 billion. The bank said earnings jumped 25% from the year period to 1815 billion or 612 a share. Revenue rose 20% to 50.99 billion, dude. 20% year-over-year growth for a bank. I mean, that's actually, isn't that close to SoFi numbers? I hope they didn't mistype that. Revenue went to 20% to 50.99 billion. I mean, that's pretty damn incredible. CEO Jamie Dimon noted in the release that his firm was wary of potential future risks, including higher than expected inflation rates, even while the stock and bond valuations currently reflect better or benign economic outlook. Now, JP Morgan is down a little bit in the pre-market, but 20% growth is just like not bad. Some people are asking why SoFi is up. Maybe it's because the banks are up. JPM right here. Now it's up a little bit, 0.35%. SoFi was touching 690. SoFi right here, 691. Guys, give me 1 second. I got to plug in my charger. Do that. thought my laptop was charged. It was not charged. All right, so now we're charged. So 677 or 691 on SoFi. So JP Morgan, 20% growth at 50 billion. And again, JP Morgan, one of the biggest banks in the world, if they're growing 20%, you would at least imagine that other companies that are not just banks also have the ability to gain momentum and do well. So that was JP Morgan's numbers. Then we had Wells Fargo's numbers. Now, Wells Fargo didn't have the best net interest income, so that's why they fell a little short. So they recorded 11.92 billion in net interest income, which was a 9% year-over-year decline. Banks, it really matters to analysts what they do in net interest income. That was below the 12.112 billion expected by analysts. And that's why we had a little issue there. So earnings per share, 1.33 versus 1.29. Revenue, 20.69 versus 20.29. Now, Citigroup is up year to date. Tangible book value on Citi is closer to $90. So when it was at the 30s, a lot of people got excited and they bought this up and got it closer into the $50 range. But the problem is, or $60 range right now. Oh, Citigroup's actually up in the pre-market. Yeah. Oh, no, I'm looking at, sorry. I was talking about Citi. I was looking at Wells Fargo. Yeah, so Wells Fargo has had a decent year. They're down 5.65%, probably because, if they had an okay year, people are going to take some profits as well. So CEO said, we continue to see growth in our fee-based revenue of offsetting an expected decline in net interest income. The investments we have been making allowed us to take advantage of the market activity in the quarter with strong performance in investment advisory, trading, and investment banking fees. Now, what was also very interesting about Wells Fargo is that, Wells Fargo is losing a couple $100 million on one of the credit cards that they issued called Built. So if you guys don't know what this card is, Built, it's a card that allows you to pay your rent with a credit card, Built Rewards, and you get rewards on paying your rent. So Wells Fargo is the issuer of that card, and an article came out a couple weeks ago saying that they're paying $100 in bounty per user, and they're losing a couple $100 million every single month, which is not good for Wells Fargo. And Built doesn't really care because they signed a 7-year agreement. Wells Fargo is like, hey, we really got too optimistic on these numbers. We're losing too much money. And so that could be another thing contributing to a little bit of the decline in the net interest income. They saw net income dip to 4.91 billion from 4.94 billion during the same quarter a year ago. So net income, like actual profits, went down. Not a lot, but it went down slightly. And so that also is contributing to the 5% decline. They did purchase more than 12 billion of their own stock in the first half of 2024, and they expect to increase their dividend by 14%. This, to me, is the only part that matters. Pretty much every bank after that stress test decided we are going to raise our dividend. Bank of America, Morgan Stanley, Citigroup, Wells Fargo, JP Morgan, and they're going to continue buying stock. And that's probably because Jay Powell told them, hey, he probably didn't officially say it, but he signaled, we're going to cut rates. And so if we're going to cut rates, you guys will not be underwater as much as you guys are. We're definitely not raising rates. Like, that has been completely priced out of the equation. And so as soon as those rates come down, we are going to see these tangible book values go higher. And I think banks are getting ready to say, well, we can buy our stock at $35 if we know our tangible book value is at 45, and we're going to get closer to 40 once we lower rates, even by 25 basis points. And we can afford to loan out more money, even if it's a little bit more risky, because we know rates are coming down. And the interest we're getting on that money, given that rates are still higher than they were 3 years ago, is elevated. So banks are not in a horrible position right now. And after the Silicon Valley Bank disaster that happened, a lot of banks just ended up, benefiting from that. And JP Morgan was one of the banks that was able to consolidate some of the regional banks that failed because they weren't able to keep up. So when Silicon Valley Bank collapsed, I think, quite frankly, it was a good flushing out of the system. We got a lot of the speculation out, and it didn't lead to a massive kind of 2008 contagion in the banking sector, but it led to banks getting more healthier, increasing their capital ratios, which was very important. A lot of banks are 1 or 2% higher than they need to be on the regulatory frameworks on CET1 ratios, which is incredible because it means they have a lot of money in case anything happens. I mean, even TFC has always been a friendly stock to this channel. TFC now touching $40.39. This company sold their insurance business just to be able to have excess liquidity in case something would happen. So the banks actually acted, in my opinion, pretty rationally over the past year and a half. And now as rates come down, it's only going to help them even more going into September. And so the last one was Citi. So Wells Fargo is down. JP Morgan is up. Citibank, the reason they are up right now is because they beat expectations on profits and revenue. 152 a share versus 139. Revenue was 20.14 billion versus 20.07 billion. Net income is up 10% year over year to 3.22 billion. And revenue is up 4% year over year, which is good enough for the street and is what the street wanted to see. The CEO said, our results show the progress we are making in executing our strategy and the benefit of our diversified business model. Markets had a strong finish to the quarter, leading to a better performance than we had anticipated. The banks are good. The banks are good. And that's very good if you are in the stock market and you're not invested in the banks, because we needed the banks to be good. And so far, the banks are doing what they needed to do. And as long as they keep doing what they need to do, then hopefully tech can catch up and continue doing what they need to do as well. Cool. So that's what we had in the context of the banks because they're using SoFi tech. So we had Tanner on the market close yesterday, and he gave us a little bit of rundown on SoFi. Let me summarize his argument for you and see what you guys think. His argument is the reason why SoFi hasn't launched a lot of innovation and like products and like, Robinhood's launching like a new thing every single week or something with like different product updates and stuff. He's saying SoFi can do that. They haven't done that because interest rates are high and they know their business thrives in a low interest rate environment. So they are waiting until 2025 to put out all these like cool innovations, like level 1 options or whatever in their app, because then the market will respect the innovations they put out. But if they launch like an AI portal or something right now, the market's not going to respect them because interest rates are drowning out their lending business. I thought it was an interesting argument. I disagree. I think that Robinhood was being disrespected for a long time in the end of 2023, and then they pivoted, and then they started changing stuff, and they just started putting out new updates, and eventually the street just noticed and changed how they thought about the stock. So I think if SoFi had the innovations, they would have put it out. I don't think waiting for a low interest rate environment is the way to justify it. I think they just don't have the innovations yet, and that's okay. But I don't know if like keeping it under your, under your blanket until you put it out is sort of the argument here. Krupa says, I agree with him. Right thing at the wrong time is the wrong thing. Yeah, I can see that. But my thing is, if SoFi launched level 1 options tomorrow and people really liked it, or an AI portal tomorrow on the app or something, and people really liked it, that would just increase stickiness, increase engagement, and that would increase theoretically growth, which would reflect in the numbers, which means the stock would theoretically be re-rated. So I don't know if holding off to all these innovations is the right thing until 2025 when the market environment gets a little better, because I just don't know if that's the way you predict that type of stuff. I don't think they fully have the innovations yet, and that's all right. But that's kind of my take on why they haven't done a lot of the stuff. I think at the end of the day, Noto's talked for 8 minutes about why they need a low interest rate environment to succeed. And what's funny is, a lot of people hated Robinhood because they thought they couldn't succeed in a low interest rate or high interest rate environment because they were such a low interest rate phenomena. And they totally pivoted and they became a high interest rate company that thrives in a high interest rate environment. So SoFi's Noto saying like, we need low interest rates. That's basically the interview, right? He said, we need low interest rates. And that's the part where it's kind of like, well, all right, I guess we just have to wait till low interest rates. But if you could pivot the company, maybe they would have by now in this low interest rates. So I don't know. I guess we'll see how that plays out. But SoFi's up right now, and it looks like it might have a chance to get back into the 7s as bank earnings do well and we get into those low interest rates. SoFi is not necessarily a small cap, but still 7.16 billion market cap. IWM continuing to show momentum in the pre-market of 1.22%. If the small caps do run, maybe the SoFis of the world just kind of as a sympathy play run with them, just because money starts to rotate a little bit out of the Max 7 and we see a little bit more momentum in a name that's gotten absolutely beaten up. And so I wouldn't mind if that happens, but the question is going to be if that plays the way it does play. Respectfully, Hood didn't start ramping up until there were catalysts, market rebound, crypto, TD to Schwab, etc. I agree with that. I'm not saying that there weren't catalysts, but my point is those catalysts, Robinhood, so the catalyst I think you're mainly talking about is crypto, right? Because the market rally kind of happened around like March and April. They announced that gold event back in January or early February. So it's like, I think 2024 was going to be the year, regardless, that they were going to start capitalizing on 1% match in gold. Oh, and by the way, they started, people forget, they started the 1% match back in April of 2023. April of 2023, when the market was shit. They were like, hey, we'll give you 1% on your IRA. So they capitalized on that by making that 1% of your brokerage transfer back in October of 2023. Not 2024. That was October of 2023. I remember they did the Wall Street Journal article of Robinhood's giving you 1%. They brought in $1 billion in Q4 of 2023 off the transfer. So still when the market, remember the market not bottomed, but like pseudo bottomed in October 2023. That's when that 1% thing went live. So I think they were working on these innovations for a few years, and then at the quote unquote bottom of the market, they started unrolling them out. And then 2024, things just started having catalysts, and then they kept going. But I guess we'll see that in 2025, does SoFi have the ability to start putting out these products if they've been working on them. Okay, let's talk about Palantir. So where's Palantir right now in the pre-market? Palantir right here is at 27.25. So still holding 27. Exciting to me on Palantir. If we fall back to 26 or 25, given it's a Friday and we see a little bit of a sell-off, I don't think that's that big of a deal either. In terms of why it's down, well, it's run up a lot. It's up 23% over the past month. It was at 28.59 or 28.70 at one point yesterday in the pre-markets when the CPI data came out. So right now, it's at 27.21, down about 1.56%. The fact that we've held 27 as aggressively as we've held, I mean, basically closing for the past 5 days above 27, to me is incredible. I mean, like that 27 number, now we're getting desensitized to it. But the first time we saw it a week ago, we were like, oh my God, 27, right? I was going on a soliloquy of how sexy the number 27 is. Now the 27 number is just like, all right, it is what it is, right? It's a nice number. But the fact that we're holding that number, I think, is incredible. And it's nice to see that. We still don't have an earnings date for Palantir. I'm assuming it's going to be in August, early August, but they still haven't come out with an earnings date yet. Tesla down 2% in the pre-market, 236. Nvidia down 0.01%. If we look at the Max 7, all of them are down in the pre-market besides Apple. Apple's up slightly, but Microsoft's down. Meta is down. Wow, Meta to 499, down 2.54%. Let me see if there's any news on Meta or if that was just a kind of sector rotation that happened. Oh, a note from Edgewater. Okay, so they got a downgrade. It looks like they got a downgrade. I'll try to find the downgrade, but it does look like Meta got a little bit of a downgrade, and so that's why it's down. And Meta got a lot of upgrades as well over the past couple of weeks, but today they got a rare downgrade by Edgewater. So that's why Meta is down. So this is the question. So here's the question I have for the chat. Do you think the rotation from large caps is actually going to happen and we're going to see small caps? What do I mean by that? I mean, Nvidia goes to 115, Tesla goes to 225, Google goes to 175, Amazon goes to, let's say, 180, Microsoft goes to 430, and then Meta goes to like 475. Right now it's at 500 in the pre-markets. Do you think those, and then let's say Apple goes to like 200 again. Do you think we see all of these decline by 3 to 4% and we see IWM get closer to 230, 240? I know it's hard to say yes to that because those numbers kind of sound crazy on the Max 7, given what we've seen in the run-up. But if this is the time for the rotation, then maybe we really do see money leave and enter into a new kind of sector in the broader economy. Let me do a poll. You guys seem split on this. Some people are saying no. Some people are saying yes. By the way, money market funds decreased by 10 billion yesterday. So not a substantial number, but we did get a little bit of a decrease, which was nice to see. But we're going to need to see more decreasing to prove that's the case. Okay, so small cap rotation. Yes or no? Small cap rotation. I still think no, if I had to guess, just because I don't think people trust IWM over Nvidia. If Nvidia goes to 110, I think people stepping in by the dip. Now, I could be wrong on that, but I guess we're going to see. One thing that's very interesting, though, about these large cap names, even if people don't think that they're going to transition into small caps, there is some money transitioning from the company to the CEO's pockets. Nvidia, Jensen Huang, he sold $300 million worth of Nvidia. Jeff Bezos sold $10 billion. This is all year to date. Mark Zuckerberg sold $2 billion. Tim Cook sold $33 million. Satya Nadella sold $524,000. Sundar Pichai sold $92 million. Now, all of these insider sales are still 1 to 4% of their ownership, right? So it's not a substantial amount of ownership. Sundar had the highest at 20%, so he sold off about 1/5 of his Google stake. But the rest of these guys still own a crap ton of stock, and this is not that big of a deal. But they are taking profits. And so it's not like they're obviously liquidating, but I would imagine some other people that have been holding on to these companies take a little bit of profits. The question is, are the small amount of profits enough to create the transition where those profits rotate into IWM? Gene says, I never understood the argument. Yeah, the argument is just that they're historically undervalued. It's just they're kind of some crappy company. Outside of ELF, SMCI, and MSTR, I don't know how many exciting companies are inside of the IWM. But it's going to be very, very interesting to see if that rotation happens, dude. If we see another green day today where IWM's green, the market's red, oh my goodness, it's going to be interesting, dude. I think you've got a sector rotation, financials, energy, REITs before you get a segment rotation, large, mid, small. I agree with this, and we're seeing this already right now with REITs and regionals yesterday. And that actually makes sense because you can trust regionals and REITs and energy before you can trust just general small caps. So that's a fair point. I guess we're going to find out over the next couple of days. I mean, today's going to be telling. Today's a Friday. We tend to see a little bit of a sell-off on a Friday, but I will be interesting to see, does this rally have a chance of actually maintaining itself in small caps? They're up in the pre-market. Usually they fall in the pre-market after they have a green day. So now we just have to see if they follow through going into the open. Robin, it says Pounce earnings are on August 5th, but they're just estimating. They don't know. Like until the company officially puts out a number, then we don't officially know. August 5th is what, a Thursday or something? I would imagine, yeah, it's August 5th is a Monday. No, I don't think it could be a Monday. Last time I think they did it on like a Wednesday or something. Yeah, we'll see. Robinhood earnings are on August 7th, but Pounce earnings should be out soon, and we'll know. Oh, Druckenmiller, yeah. So someone mentioned Druckenmiller in the chat. Drux, again, it looks like Drux is, maybe he got it right. Maybe Drux has got it right. Again, Drux bought a lot of IWM. He also bought a lot of Palo Alto and Reddit and KRE. So he bought regionals and small caps. And over the past 3 months since he bought it, small caps are up 5%, now 7%. Regionals are up 13%. Palo Alto Network's up 17%. Reddit's up 60%. He probably didn't get exactly in the IPO, but he probably got a little bit above that. And Palantir is also up 20% since he bought. Remember, he bought 770,000 shares at an average of $21.30. So now when his new 13G comes out, it'll be really interesting to see if he disclosed more and he doubled down on that position. But if he's back in these names along with some of the small caps, maybe we do see a broader run in some of the positions that he's looking at. Jet says rate cuts will ensure rotation. Mega 7 will look so desirable with their ability to park, or not look so desirable with their ability to park and collect 5%. Yeah, I think that's fair as well. When rates get cut, money market funds probably are going to need a little bit more yield, and that yield might not be able to come from the Max 7. Maybe it comes from the dividend plays, the kind of Liz Young thesis. It comes from the Verizons of the world, or it just chases yield, and then it goes into small caps. So we're going to see. Remember, IWM yesterday, and IWM was up 5%. The S&P was down 1%. That hasn't happened since 2008. So yesterday was a pretty historic day in terms of the sector rotation of IWM and or like not fully sector rotation, but like the little bit of transition people are thinking is happening. That hasn't happened in a long time. And so we'll see if that continues to happen going into today. Tesla's tanking right now. Where's Tesla? Where is Tesla? Where is Tesla? Tesla right here. Wow, 235. Tesla's down even more. Oh boy, 235 on Tesla. Enphase is actually up 1.28%. Enovix is up another 1.46%. Even Rivian's up right now. I think, again, I don't think people are selling Tesla because they're buying small caps right now. I think this pre-market action, and hopefully this does not turn into an engulfing red candle to the 220s when the market opens. I think this is because of this Bloomberg article, dude. Anyone who thinks it's not because of the Bloomberg article, I think you're wrong on this one. I think this is the red candle, dude. This is July 11th, right? Yeah, look at this red candle. This red candle right here is when, am I looking at the right one? Oh, this was, yeah, so here we were. So 271 yesterday, and then we came down to the 260 range, from 270 to 260. And then that red candle right there, all the way down to 253, and then we kept falling. That was the Bloomberg article that came out. And this right here is when everyone was hoping to God Elon would just send to one tweet saying this was fake. And he didn't. And so now I guess we have to see if this continues to be fake or not. What the funny thing it will be is if it goes below 200, I wonder if everyone who felt they missed the dip is going to get into Tesla, right? So like now we're going to see if all the people that were scared that they missed the run of the most amazing undervalued AI company in the world, do they get back in? And they probably won't, because that's just what happens in the market. But let's see. Let's see if it plays out. People are calling Bloomberg fake news. I don't know if it's fake news yet, man. Remember, Reuters was the one talking about M2, not Bloomberg. And Reuters is not as reputable as Bloomberg to me. And Elon shut them down within a couple hours. He did not shut down this piece of news yet. Another update on AT&T and Snowflake. So Snowflake right now is down 3.2%, and AT&T is down as well. And that's because they had a data breach. AT&T down 1.38%. So Snowflake and AT&T, they are clients, or AT&T, I believe, is a customer of Snowflake. And unfortunately, Snowflake, we saw they had data breaches a couple of weeks ago that has put some pressure on the stock, but they continued to have some more pressure today. So Snowflake and AT&T are moving lower. AT&T says new hack includes records of customer calls, which were stored in Snowflake. AT&T suffered a massive hack of customer data separate from one reported earlier this year. This includes records of calls and texts from nearly all of its mobile phone users for a 6-month period in 2022. That's crazy, right? Like all that, dirty stuff you're texting your girl, that's there you go. It's hacked now, and that's because of Snowflake. The company said in a regulatory filing on Friday that the breach, which hasn't been previously disclosed, also includes those records from customers of wireless service providers that use AT&T's network between 2022 and October 31st of that year, May of 2022 and October 31st. The company said it learned in April that the information was illegally downloaded from a workspace on a third-party cloud platform, which a spokesperson identified as Snowflake Incorporated. Dude, if this happened with Palantir, I think Palantir works with T-Mobile. I could be wrong with that. I'm just guessing. I think they have a partnership with T-Mobile. If this happened in some capacity with Palantir, oh my God, dude, the amount of media coverage, it would be disgusting. It would be so bad. But Snowflake's really not, their stock's getting hit, but they're not necessarily getting the media coverage that's that bad. But they are down 4%. Now, Goldman Sachs is pounding the table on Snowflake. They are saying this is a screaming buy, $220. It's incredibly undervalued. They're going to outperform. News like this makes it hard for investors to keep feeling that the company is going to be secure and safe. But I do think they will still outperform on earnings because it's gotten oversold a lot. But this is a problem. This can't be happening with secure customer data. This is just not the best thing. Where's Robinhood? Robinhood's below 22. Robinhood, 21.99. Yeah, let's see if it rebounds from here. It bounces every time it gets to this level. Now it's at 22.08. Wow. Okay, so that bounced really quickly. It might just go right back to 21.97. I think Robinhood's struggling with Bitcoin volatility. Bitcoin just couldn't find a way to keep itself above that $58,000 level. And so that's also probably hurting Robinhood right now. Bitcoin right here at 57,540 on the day. All right. All eyes on Tesla on the open. Thank you, everybody, for being here. 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Tesla, 235 on the day. It's struggling with that green candle right there, trying to get above that. So 236. We had a green candle. We had a red candle all the way to 235. Now back at 236.28. Again, the mystery of this robotaxi event being real or not. It's either going to get eat up as a dip, as fake news, or it's going to get sold off even further. So let's see what happens there. We'll go back to Tesla in a second. Palantir, nice bounce from 27.13 up to 27.50. So 1.56 million shares traded within the first 10 seconds of the market opening. Not bad. 27.54, up 0.36% on the day. Snowflake down 3.2%. Robinhood 21.98, down 0.25%. TFC $40. So that's slightly red, but still green overall. IWM opens 1%. There is a red candle right there. It was up 1.3%. Now it's up 1%. Let's see if people get in on that red candle. Rivian 16.94, trying to touch $17. SoFi 6.91, opens up plus 2%. A run to 7 is not asking for a lot. It's 10 more cents. Let's see if SoFi can get a bit of that momentum. TNA is up 3%. S&P, wow, S&P's green. Again, if you're just joining, the PPI data was not as good as expected. The PPI data was actually the PPI data was 2.6% versus 2.3%. So it came in lower or higher than expected, but still the market doesn't care, continuing to go higher. Airbnb was down 2% yesterday, now 147. PayPal back at $60 after being in the depths and the hells of 57 for 2 weeks. Enphase at 113 and Novix at 1788. SLG, wow, look at that. Remember SLG last year at $19, dude? This is one of New York City's biggest REITs for commercial real estate. Exciting, dude. Very exciting. $62 on SLG. Again, REITs and financials probably are going to do well as inflation data shows that we're going to get a cut. KRE, yep, KRE regional banks are up right now. Robinhood back to 22. Bitcoin 57. Wow, Tesla's down. Tesla's down. Tesla is down. There you go. Down 3% on Tesla. All right, so we got $3 until we hit the 220s on Tesla, which is annoying. Elon's not tweeting anything. Elon's not denying any of this shit. It is what it is. It is what it is. This is what you get when you invest with Elon. Intel, $34. That's up 1.79%. And again, I don't think anyone can complain per se because the stock's up from 167. So it's like, it's up, right? Like it is up a lot. But if it went down on just like the market being down, it's like, all right, whatever, right? The market's the market. It's going down on an article that Elon's just not responding to. And I think that's the issue that people are having right now. That's annoying. Who's buying this Tesla dip at 234? Who thinks this is a dip from 270? Is this the actual dip, or is this just, it was never meant to be a 270 and that's why it's going down? Who's actually trying to cash in on this? Palantir 2730 down 1%. SoFi still 689. Nvidia's green. Wow. Nvidia goes green. IWM still not going red while Nvidia goes green. IWM, a little bit of a red candle, but it's still up 1%. SMH is green. Meta's down. That Edgewater note apparently wasn't the best. ARM is up a little bit. Celsius down. The biggest thing we don't want to see is large caps and small caps go down, because then it's kind of like, well, money's just leaving the broader market. So at least if one of them is going up, that's what matters. If both are going up, then that's great. But IWM right now still green as Nvidia goes up. Let's go to the crypto stocks. The crypto companies are relatively flat. Coinbase is up a little bit. CleanSpark's up a little bit. Cypher, MicroStrategy is down. MicroStrategy is doing a 10-for-1 split. They announced yesterday. IREN is down 2%. Marathon's up 1.3%. And then Bitcoin right here up 1.29. Germany only has $200 million of Bitcoin left. They sold another 800 million yesterday. So Germany's like officially liquidating their Bitcoin. Why are they selling their Bitcoin? I have no idea. I literally have no idea. If anyone knows in the chat why, if anyone's from Germany, are the German officials that are selling their Bitcoin, are they in Hamburg and they needed money to buy more hamburgers? Is that what's going on? Because I can't conceptualize why they would sell Bitcoin at these levels. Like I don't get it. But if someone can tell me, I would appreciate that. Tesla right here, 234, still down 2.6%. Matt said he sold some IWM puts on 205 for September 30th. Okay, 205. Well, we should get the rate cut right before then, right? So that's not the worst strike either at that 205 level. Let's see. Meta. I didn't see the note from Meta or Edgewater yet. Yeah, I just searched it. I didn't see the note yet. I'll try to find it, but I am curious what the hell Edgewater is thinking for why they wanted to downgrade them. It would have to be something to do with CapEx, because I don't think it's going to be like advertising weakness. So it has to be something else they're seeing that's a little bit of an issue. SoFi, where's SoFi? It's trying to get to 7. SoFi, right? Wow, 698. Man, 7 would be psychologically nice. 7 would be 699. There you go, $7. There you go, $7. It's back. It is back. Noto interview, rate cuts. Seems like that was a little bit of the momentum it needed. Now it just needs to hold that $7 range. I still have my sister's 70 call options or call debit spreads on SoFi. And so if it can get a little higher, they will be even more in the money, which will be nice on those. Yeah, those are up 12% today. So yesterday those call options were worth, or 2 days ago, 4,500. Today they're worth like 7,000. Just because SoFi moved to $7. And the strike on those is 7, right? So it's like, if it just stays above 7 for the next couple months, it'll do okay. Germany has made the wrong decision on every decision they've made for like the past 20 years. The place is a shit libs utopia. Yeah, see, I can't speak on that too much because I've been to Germany once, but I've never lived in Germany. I don't really know what Germany's like, but it does feel that selling Bitcoin at these levels, especially because they had so much of it, is stupid, given, they did do a bad energy deal with Russia. There are things that didn't go well, but selling Bitcoin to me, I don't know why they need the money for Bitcoin, dude. There's so much more they could have done. Tesla, where's Tesla? Tesla bouncing a little bit. Oh, wow. Tesla bouncing a little bit. All right. So 1% away from going green on Tesla. So people are buying the dip on that, 233 to 234. Rocket Lab is breaking out. Where's Rocket Lab? Rocket Lab. Wow. 547. RKLB. Look at that. Huh. 2.8% up on Rocket Labs. Very interesting. Very interesting. Open Doors up 8%. Well, that's kind of dumb because their business sucks, but obviously interest rates going down are good for them. They're up 10%. The only problem with Open Door is like until mortgages come down, like people aren't buying older inventory. So like they need interest rates to really come down. But even then the question becomes, is the business itself good? And I don't even think they're profitable yet. I could be wrong. I still don't think they're profitable. And it's been like 3 years at this point. If you had to tell me pick between a SPAC from 2021, Open Door or SoFi, I would put everything I had into SoFi before Open Door, dude. Like SoFi unequivocally would win over Open Door. So now it's just a question of if SoFi can maintain this momentum as rates come down. Chewy's up as well. Where's Chewy? Chewy 27.12. That's up 2.46%. Where's GameStop? We haven't heard anything from Roaring Kitty in like 2 weeks. GameStop's up a little bit. It's starting to make me feel like he just doesn't care anymore about this. Robinhood back above 2204. He still owns 9 million shares of Chewy. I mean, the dude owns a lot of Chewy, so it'd be nice to see like a meme from this guy around what the hell's going on. But hopefully we get something. Rocket Lab was in the threes not so long ago. Congrats to shareholders. Yeah, and shout out to Matt Money. Matt's been pushing Rocket Lab for a while now. This is the one stock that he really does feel is deeply undervalued. 27.59 on Robinhood. Look at that. Or not on Robinhood, on Palantir. 27.60, 0.11% away from going green. Dude, every day Palantir has a dip and then it just comes right back up and it goes green. Even if it's slightly green, it goes green. And so the there you go. We're green. 27.65. The price volatility is not enough to stop it from closing above levels that really matter. What is that level? 27.5. That level matters a lot. And almost every day, Palantir is closing above that. Yesterday, I think it closed slightly below that, but still 27.73. Look at that on Palantir. Like the thing is, it's normalizing people to buy at $27, which is important. Just like Tesla has normalized people to start buying in the 230s and 240s, because Tesla right here, 239, trying to look at that green candle, trying to get back to 240, because now it's like, okay, well, this is the new price that these stocks are valued at. Rivian's up as well. Hims, where's Hims? Hims is up. Hims is up 4.75%. We're getting a bit of a pump today. PPI data was not enough to stop the market. CPI 557.82. Market's up. Market is up. Where's the Qs? I think the Qs are 494, 492 on the Qs. And then IWM is green. Look at that. 1.26. It was just at 1.0. So it got up another 0.28. Huh. Rocket Lab really breaking out. 553 up 3.56. SoFi trying to get back to 7, but getting stuck at 693. Bitcoin 57,000. Robinhood 2207. Wells Fargo and Citi and JP Morgan are down, but they all had decent earnings, so I don't think them being down matters that much. Their stocks were up a lot this year, so took a little bit of a breather. But bank earnings, if you're just joining, were pretty good. I mean, like the only bad part was Wells Fargo had a little bit less net interest income, and that's because they did some crappy deals with some credit card companies. But besides that, like the banks did good so far, which is really important. Delta, let's look at them from yesterday. They took a nasty 8% hit. They're down another 0.61%. And then Pepsi took a 2% hit yesterday. They're up. So they got back whatever they lost yesterday, which is not bad. Adam says, bought another 115 shares of MicroStrategy. Let's go. Germany stopped selling and Trump will announce Bitcoin as a reserve currency to the dollar. Well, that's one thing that will happen on the Bitcoin conference in a couple of weeks. Trump is going to be presenting, and he's going to probably, say I'm pro Bitcoin, love Bitcoin, all that stuff. And as a result of that, I think it'll help Bitcoin's price. I would imagine that's bullish. We'll see what happens there. But if Germany and Mt. Gox are done selling and Trump comes out as pro Bitcoin, theoretically, that should be a catalyst for Bitcoin. And if that's when Bitcoin really starts taking off into that August timeframe, going into September, going into the first rate cut, maybe we see Bitcoin back above that $72,000 range again. Is Tesla green? Wow, Tesla's green. 241. Did Elon tweet something? What's the reason? Is this an Elon thing, or is this just the market being the market? Tesla's green. Even Palantir went green. Elon has not responded. Elon has not tweeted anything. So either this is just people buying the dip, or people actually know that the robotaxi news was fake, and that eventually they will. Elon's going to announce something on it. Rivian's green. Wow, Tesla really fought back from that 232. Rivian, wow, 4%. Look at this. The whole market's green. We're getting the banks that are red, Snowflake's red, AT&T's red. That was specifically Delta's a little bit red from yesterday. Unity's green, Lucid's up 13%. Dell's down a little bit, SMCI's down a little bit, SolarEdge is green, CrowdStrike's down a little bit. DJT's up, Bumble's up, Fubo's up, Siri's up. TSLL leverage on Tesla, that's up. Tesla now 242. Tesla 242. Yeah, some of the Max 7 are still down, but Tesla's green. Meta got a downgrade, Kaios. They got a downgrade. I can't find the downgrade yet, but they got a downgrade from Edgewater. And actually, hold on, let me check this website that usually has the downgrades. Let's see if I can get that downgrade, because I am interested in as well. Meta's been getting is upgrades, so I'm actually curious why that played out. But Meta did get a downgrade today. For now, it's still 8824. The fun thing people were saying is Elon never said what year. He said it was 88. He never said 1 year. He never said what year. So maybe it's 88 2027 or something, dude. Oh my God. Square up today? Square's up. Market's ripping. Maybe the market's digesting the CPI yesterday, and they're actually a little bit more bullish on it than not. But the PPI data surprisingly came in hotter than expected, and the market just does not care. S&P is pushing 558, 557.6 right now. Robinhood right back up on the bounce here. 2209. Open Door up 7%. S&P green, and then Palantir 2768. We're green. We're green. Tesla's green as well. He said 1 million robotaxis in 2020. He's coming out with a time machine. What changed? I don't know what changed. I mean, I guess. Wow, Tesla's now up 1%, dude. Holy crap. Tesla just added like 25 billion in market cap in 5 minutes. So bottomed basically at 230, now at 243. Now we'll see if we can get above that 243 level. Ultra and currency, I just bought 200 more Palantir, 30 Tesla, and 30 Nvidia. Regardless of what's happening, the fundamentals are still there. Robotaxi has to be real. Self-driving cars are already going on in China. I don't think anyone's arguing that robotaxis aren't going to be real. I think now people are thinking, all right, so we know this is a real technology. The question is like the deployment, the logistics, the competitive aspects of it, the margins. Like now people really want to get real clarity, which is why I think the street has been giving Tesla this premium, because they're like, well, we know it's real. Tell us now like how you get it done. And so this is why this earnings and this event, whether it's on August or October, is so important. Because if Elon can give out a game plan and be like, hey, like this is going to happen. It's inevitable. You give us like a year or two, but like here's exactly how this is going to play out. And the street eats that up. Then I think Tesla will quote unquote get that premium and quote unquote be overvalued over the next 2 years until robotaxi goes to scale, because the street's going to believe it's going to really grow into this amazing valuation with a product that has 90% margins, like kind of what they're doing with Palantir. They believe Palantir is going to grow into monetization. They think AIP is going to work. They're just giving them time. By the way, I heard, remember the CEO of the startup Hebia that raised 130 million? I saw the CEO speak yesterday on Bloomberg describing like the AI revolution and stuff. And it just made me so grateful that we have Carp as a CEO, because I'm just like, if these are how the startup CEOs are talking about AI, it's just buzzword after buzzword. It just like, it was a mess, dude. It's like, it didn't feel good. And I was just like, if these guys can raise, 130 million, get close to $1 billion, and Palantir that's actually doing real shit, I would imagine we're going to command a bigger premium from the market. S&P goes to 558. Wow. S&P goes to 558. Look at that. 558 on the S&P. So here's the thing. Yesterday, the analyst that said this is where you get a dip from large cap, you sell your large cap, you rotate, and you like hold on for the fences, or what, you get a little cautious, you diversify. S&P is rebounding right now. This is where time after time this rallied over the past 6 months. They've been proven wrong because every time we get a dip on the S&P and we close red either intraday or the next day, within a few hours, we go green and money comes in and it swallows up the dip. So if this persists today, then that trend, it doesn't seem like it's stopping. And we make our way back into the 560s on the S&P. And maybe IWM follows with us as well into the 230s or 240s. To be fair, Karp just uses buzzwords. They're just unique Palantirian buzzwords. Yes, but he puts like 17 uhs in between every buzzword. And like, to be honest, though, some people say the uhs are annoying, but like, I think it keeps people listening to an extent, right? Like, if someone says 50 times before they get to their next word, you're actually curious what their next word is going to be. So in some respects, it makes people want to listen. Not bad, dude. This is look at this, 558.25. Hims is up 22.51. Palantir, 17 cents away from 28 bucks, 27.86. Let's look at the resistance on Palantir. Let's see if we got anything there. Let's see right here. Palantir. Yeah, there's no resistance at 28. There is like nothing. There are at 28.15. There's a little bit of resistance at like 50,000 shares, but besides that, there's nothing. So if we get the momentum, we can run to 28. We can run. I think we can run. Southwest Airlines signs a memorandum of understanding with Archer Aviation to develop operational concepts for air taxi network. Wow. Okay, that's interesting. So Southwest, let's look at Southwest. Southwest is up a little bit. Archer Aviation is up 8%. Southwest has partnered with Archer to develop an air taxi network. Dude, we are really entering into a new era, dude. Like, people are going to be on air taxis now. That's incredible. Archer is the company that does vertical takeoff with their eVTOLs. So Lilium is a company that kind of operates in the same way. They're not as big as Archer. That's interesting. That's very interesting. Where's Rocket Lab? Rocket Lab right here at 551. That's up 3.38%. Tesla 243. Hims 2241. Palantir 2786. Palantir still trying to make a go for it. Robinhood 2220. Yeah, this entire market's getting a bit of a pump now. Its entire market is getting a bit of a pump. ARMS is up. ARMS up 4%. Okay, so that one went green. 190 billion market cap. Rivian's I think the star of the show, dude. Look at that. Dude, Rivian was at $18. It's 20 cents away from 18 bucks last week, and that was up 50% in like 2 hours. It fell after that, but now it's going right back to that close to that $18 level, and that's going to be up 50%, even if it wasn't, in 2 hours, but in 2 weeks. So if you held on to Rivian, you've done very well. And Rivian is showing that they have some signs of life here. Yeah, the street did not care about PPI. They didn't give a shit about PPI, dude. The figure guy was the Archer guy. Yes, the Brett Adcock. He started Archer and then he left to build Figure. But that is his previous company. Tesla now 244. Tesla now 244 on the day. And we got some momentum on Tesla. SoFi 7. SoFi at 7. SoFi 697. I think SoFi could break 70. This whole market's pumping. And if SoFi just follows a little bit, I mean, a couple of cents, I hope is not asking too much for SoFi. SoFi has 1 billion shares outstanding. So every dollar they go up, they add 1 billion to the market cap. So from 6 billion to or a little bit more than that, 1.1 or something. They're basically at a $7.34 billion market cap at almost $7 right now. So if they get closer to 740 or 750, they're going to get closer above an $8 billion market cap. And then Tesla adds 3 billion every time they go up. Nvidia is also pumping. Look at that. Nvidia 129. Wow. So now here's the question. Nvidia's up, Tesla's up. IWM is also up, but it's not as much as it was at 930. So you see this red candle on IWM. This is the confusing part here. Does IWM sacrifice their momentum for Nvidia and Tesla and the large caps to gain their momentum? And if that happens, then it's the same story we've seen for the past couple of months. If it doesn't happen and they both go up, that's amazing. But if Nvidia takes a dip and then IWM goes up, then maybe we are seeing the start of a little bit of that rotation. Meta got a downgrade. Meta got it down. We haven't found the downgrade yet, but Meta got a downgrade from Edgewater, and that's why they're down 2.84%. Carnival Cruise, the cruise lines are doing well. Yes, the cruise lines are doing well. Wow, Carnival Cruise, look at that, 1838. This is Chris's one. Chris has been in this since 14. He laid out the thesis yesterday on the market open. And the core thesis is more people are going on cruises. This thing is beat up since the pandemic. Their debt interest schedule is being flattened over the next 4 or 5 years. So even though they have a lot of debt, which they do, the interest maturity on that is not as high as people think. And they're profitable. They had a surprise profit last quarter because they're normalizing their operational expenses. So this one, and if we get rate cuts, it's only going to help Carnival Cruise because that helps the debt payments that they have. So 1841 on Carnival, that I would imagine Norwegian is also up today. NCL, that one should be good. Or let's do Royal Caribbean. Royal, what's the ticker for Royal? RCL? Yeah, Royal Caribbean. Yeah, that's up 1.56% as well. Tesla got a downgrade. Yeah, they did get a downgrade from who did they get a downgrade? They got an upgrade today and a downgrade. They got a downgrade from UBS. So UBS said sell it 197 price target. But Goldman and Morgan Stanley said buy it. It's going to 278. And Citi, they said it's going to 274. So right now, Tesla bulls are winning over the bears. Tesla right here at, wow, 245. Look at that. Tesla's really fighting back. Tesla is really, really, really fighting back. Palantir, 8 cents away from 28. I mean, I don't know. I mean, why does it feel like Chris wants all of us to fail? He doesn't want anyone to fail. He just wants Palantir to fail. He doesn't want you guys to fail. He just wants Palantir to fail. 27.97. Oh boy, could we do I got to do the one share? I think I got to do the one share. I think I got to buy one share. I think I got to 27.97, 27. Well, let me check the resistance first. How bad is the resistance at 28? At 28, there's 22,000 shares. Okay, so that's a little bit of resistance. It's resisting. It's resisting. I got to do it at 27.98-ish. I'll load it up and we'll see if that's enough. 27.90. If I see 27.98, I'm pulling the trigger. If I see 27.98, I'm doing it. Okay, I saw it. I did it. It's done. Purchased 27. They got me at 27.97. Let's see if that gets us over. Let's see if that gets us over. So there you go. The one share is in, up 1.23%. Does it do it? Does it do it? Do we ring the bell? Do we get the... Oh, we got a red candle right there. Oh, we got rejected right there. Let's see. Let's see. 20. Are they going to make me buy another one? They're going to be like, oh, we'll tease you again. Buy another one. There's only 20,000 shares, dude. I think 22,000 shares gets eaten up at $28, dude. There's no way 22,000 shares is going to stop us from winning. 22,000 shares, that's nothing, bro. I need to call Derek. I was on the phone with Derek yesterday for the past for like 2 hours. That's why I was late to the market close. He's working on some really cool stuff, dude. He's working on some really cool shit. It's gonna be fun when he can announce it. But I should legit call him and just be like, dude, can you just buy 20,000 shares, please? That would, dude. When he did that the day of earnings, when he just bought 50,000 shares, and like it was the most hilarious thing ever, dude. It's like that was like $1 million of just like fucking around. Like it's like you get so rich you just don't give a fuck. It's like, oh, $1 million here you go. It's like, it's hilarious, dude. I got to get to that one day, and I need some help from Palantir to help me get to that. So, all right, 27.98. Come on, bro. I think we crossed 28, guys. I don't think 20,000. If this was like 400,000 shares, I would say something like, yeah, it would be tough. It's 19,000 shares now. There's no way that's stopping it from getting to 28 again. There's no fucking way. 19. Matt, you're a whale. Can you just buy the 19,000 shares, please? Get it over with. Can you please get the, like, this is stupid. Let's get, dude, if we hit 28 3 days in a row, bro, we hit it. And no, it's 4 days. We hit it on Monday, or we hit it on Tuesday in the pre-market, even though it fell from there. It would just be nice to see us back above 28. It would be nice to see it. All right, I'm doing another one share. Fuck it. I'm doing another one share. Here you go. Just bought it, 27.98. Just did it again. One share. It's in. Let's see. We're going over 28, dude. We're not stopping this fucking. This is not going to stop us. There's just not happening. It's not happening. Some of you saw 28. I didn't see 28 yet. I didn't see 28. I didn't see. It's right there. It's going to happen, dude. We're hitting 28. We're hitting it. We are hitting it. Watch me say we're hitting it for like the next 2 hours and we're stuck at 27.99. There you go. Wait, did we get it? Did we get it? No, it's not there. It says it's ready to get. It'll be there in a second. Yep, there we go. $28. Now we just got to break through. Yeah, I think we break through here. Yeah. Now we break. I think we go back up to. I think we break through, at least in the low 28s. There's no resistance anymore. Now it just needs volume to keep going. 27.96 on the day for Palantir. All right, we'll see. We touched it. We got the first base. Now we're just trying to get to second base, dude. And 30 would be a home run at least this year. So let's see. Julian says I bought 25,000 shares at 27.98. All right. Well, maybe Julian got us got us over the hump. All right, not bad. That was fun. We'll see if it gets back up to 28. Let's hear from one of the people that are bearish on Tesla to get another perspective on what's going on for Tesla. Yeah, Palantir's dropping now. All right, so it was fun while it happened. We'll see if it gets back there. Tesla 245 up 2%. Let's hear one bearish argument again for why some people might be selling it off, and then we'll keep going from there. Here we go.
Now to Tesla, it is the mega cap that was down the most in today's session, down about 8.5% after a report that the robotaxi event that we expected in August, it's not going to be till October. This pullback breaks an 11-day win streak. And on Friday, Guggenheim analyst Ron Yosiko joined the show and warned about headline risks about this robotaxi event. And Yosiko joins us now. Well, this isn't as dramatic a move as you might hope, I imagine. Yeah, and I mean you specifically, Ron, because of your sell rating here. But what does it say? This was the robotaxi event that Elon Musk announced some months ago, kind of rescued the stock. It was on the decline. He said, oh, we're going to do this event. People got excited, and now it's getting pushed off. Why, do you think?
Yeah, it's a good question. And to be clear, we don't have all the details right now. But I would say the genesis of this event, or at least the genesis from an investor point of view of when this started, was there were reports that the next generation platform was being canceled. And they were scheduling the 8.8 robotaxi event that same day was when the public announcement was made. I think there was skepticism even at that time when we were talking with investors about what they could actually show. But we have entered this almost hype cycle over the last several months ahead of this event, which our view was it did create some risk. It's much easier in our seat not actually allocating capital to say there was risk there. But I think at this point now, Elon's called himself the boy who cried FSD being full self-driving. You do have this unreliable or lack of credibility with the narrator now that's starting to emerge, because even showing a prototype is only the first step of actually commercializing a robotaxi. We think this is 2030 or potentially well beyond 2030 before Tesla has a product in the market. Mm-hmm. It's important.
And so that's why Tesla's struggling, at least down from its highs at 270. If you believe this is a 2030 story, then obviously it's incredibly overvalued. But the market so far does not think it's a 2030 story. They think it's a hopefully 2025 story. And so you got Tesla right here at 245 up 1.9%. SoFi 1.76 up. Nvidia's up. ARM is up. IWM and Nvidia are pumping. IWM is officially green from the pre-market. Look at that, up 1.5%. Nvidia up 2%. Never thought I would see both pump at the same time, but they're both pumping, and that's incredible. Palantir is still in that 27.90 range, 27.94. I still think we get back to 28. There's now like 15,000 shares waiting, so I think the momentum's there. It just has to kind of break through. But we'll see what happens there with Palantir. So entire market, not doing too bad. Let's bring in good friend of the channel. Palantir got us a little distracted from our segment because we saw it pump to 28, but we got the man, the myth, the legend, TJ the Wheel Deal.
What's up?
What's up? Where are you? Are you in a vacation home right now? What are you doing?
Yeah, we're in Port Isabel, Texas.
Port Isabel, Texas.
Yeah,
Okay.
it's right by South Padre Island. Kristen's brothers rent these little casitas. They're like these little, I don't know, they're like modular homes, I guess. They're on a canal.
Uh-huh.
So they're like, hey, I got my buddy that came in town with all his kiddos. And he's like, hey, can we go, kind of hang out over there? And so we're staying at one of the casitas, but we're bailing, bro. We're going to the Marriott tonight. We didn't like it.
See, this is the thing. This whole revolution or this culture of people want to touch grass and they like, no, dude, people want AC and they want Wi-Fi.
Fuck this, bro.
Fuck
This
that
dude, the bed was uncomfortable. Yeah, it's all pretty, you're by the, like next to the ocean or whatever. But no, dude, fuck all that. We want room service. We want the works, dude. So we got a suite that we're checking into later.
People want AC and they want Wi-Fi.
Fuck all that, bro. Walk on the grass. And I did a hippie. I was a hippie in another life, not this one.
Yeah, like camping, dude. I remember I went camping 10 years ago. Like, I don't fucking like going camping. I was sleepwalking when I went camping. I opened the tent and I walked out into the forest. And like the camp advisor, she had to come grab me. And she's like, "What the fuck are you doing?" And I had no idea. Like that's how crazy I was. I was fucking sleepwalking.
So yeah, we did a little barbecue. We got stung by mosquitoes, dude. It was just a shit show, bro.
It's not worth it.
Anyway,
All right,
let's get into it, dude. Things are definitely looking good. Definitely looking good. So let's do this. Let me hit present. We'll go through our the plays that we have them at. I'm not able to share the Excel sheets today because there's an update that has to happen because I don't know what it's called because it's all on the big computer, right? And then it somehow does something Microsoft to shoot it over, but it says there's an error with one of the formulas, so I'm not able to do anything. But we'll just go through the actual plays that we have because we have Intel that's deep in the money, a covered call expiring today, so we'll have to address that one and so on and so forth. And we'll just kind of play it by ear that way. And then I want to do a recap on the series so far and for people that maybe have just started following, because I've been reading a lot of the comments after, and I feel like probably half of the audience has followed and the other half is kind of like new to the game, if you will. And maybe we can do a good job of trying to get them up to speed on the series, if you will. What do you think? What do you think about that?
I agree. So for those that are new to this, as TJ pulls up our plays, so TJ allocated about 500 grand from his portfolio for me to theoretically manage. I pitch him ideas and then he executes those plays if he likes them. And so it's wheeling options. We sell calls on companies that we like and we sell puts on companies that we like. And the goal is to use that 500 grand to generate some premium. I think we're up like 70 grand or something in the past 3 months, which is not bad in terms of the return. And we manage it live every Friday and we see what we can do.
Exactly. So essentially for the most part, we're selling puts, we're selling calls, we're collecting premium, we're rolling when necessary. So we're utilizing different facets of the wheel strategy. But for the most part, we've been getting away with just selling cash secured puts and closing them early. So essentially just cash grabbing. We've utilized as much as $600,000 of capital at one time. And we're up right at about $80,000 so far in a little over 2 months on the project. So not too bad. And the positions that we do own, we're actually doing pretty well on. So let me just give you guys a little recap here on positions that we actually own.
And while we get into that, guys, Palantir 28, looking like we might get through that $28 level. Nice to see that 4 days in a row. So we'll see if that holds $28 right now.
Nice. That's really, really cool. So there's 3 companies that we own shares in. We got Intel, 2,500 shares of Intel. You guys can see that we're up 9,000 on those. We got 300 shares of Nvidia, down 650 on those. And we have 2,000 shares of Path. We're up 715 on those. So we pull up Intel Emit. There's a problem here because you pitched me this idea and you said, hey, buy 500 shares of Intel and then sell covered calls against them at 31 because Intel don't move. You remember that whole pitch?
I remember that.
And I was like, dude, it's such a good trade. In my mind, I want to buy 2,500 shares, not 500. And I'm going to follow you into this idea of $31 a share as far as the covered call strike price expiring today. And we picked up money for that. But now what happened with Intel?
It went up.
With the rest of the market, right?
Went up with the rest of the market, correct.
So now this thing is not just in the money, it's deep in the money. So we have to see, are we okay just selling the shares right here and calling it good? Or do you want to defend these shares? Because essentially, whenever you're rolling a covered call, there's only a couple of reasons to roll the covered call. It's you're defending a long call, which that's not the case here, or you're defending the shares. And you're like, the premium's good, but the capital appreciation's much better.
Right.
So I want to stay in this game. So I want to add more time to the clock, if you will. I know this game's over, but I want to start a new one, right? Like, you ever done game over? You're playing video games, you're obsessed, and you just hit restart and you start all over again, brand new set of lives. So that's kind of where we're at here.
Here's the thing for me on this. I am not emotionally attached to Intel as you're not. So here's my question to you. When a stock runs higher, $3 higher than our strike, and obviously we want to keep it now because it's up, but we're not emotionally attached to it. Is the strategy psychologically, hey, let's look at what it would take to roll for the least amount of money to keep the shares? Or do you think you immediately just like let it go at the strike and take your money and run? Or is it always a first step of looking at what could I get from roll and get to at least keep the shares before I let it go?
Yeah, so there's two things it plays. One, you want to roll in this situation, since we're not emotionally attached, rolling for a debit is out of the question. So that one's out. Like, you eliminate that one. It's just like taking an exam. You're trying to find the right answer. The easiest way to get there is to eliminate the wrong answers, right?
Right.
So the wrong answer here is, why in the hell am I going to roll for a debit on a stock that I'm kind of indifferent on owning to begin with?
And when you mean roll for a debit, guys, what he's saying is I don't want to pay to extend the life of this contract. I want to get paid. I want to receive premium if I'm going to roll this contract out.
Yeah, because for every dollar in capital appreciation, we're qualified to receive $2,500 in monies because we have 2,500 shares. So that's what we're trying to achieve here. So what I would like to do is that we could add between 30 and 45 days to the contract, and we can go from 31 to 32 for a pretty decent credit. Then I would like to roll. Or the other thing that we can do is we can indirectly grab that 2,500. That's what we're going for,
right,
by simply just rolling out and staying at the same strike price, because we might get a credit in the neighborhood of $1,500 to $2,000, and then we're kind of hoping that Intel comes back down during that time, and then now the next roll is going to be better because we might be able to get a credit and increase our strike price.
See, and everything you described right there, I think if anyone who's watching this and wants to get into selling options, which I'm obviously one of those people, that scenario is exciting to me. That's like a fucking puzzle, dude.
It is.
I like that. It's like you're trying to figure out how to navigate this situation. And it's kind of cool because it requires a lot of fundamental analysis on the stock, some technical analysis, but also the science of how do I play with the market makers or whoever I'm selling the contract to be able to get in the money on this, or out of the money in this case.
Yeah, because the other thing is let the shares get called away and then just start selling cash secured puts at $32 and see what that looks like. Right. And we can get the money that way. You know what I mean?
Right.
So it's like, if we still want to be in this play, it doesn't necessarily have to be in these contracts, but we still want to be in this ticker. This is a lot different than when Shopify ran up and you're like, let it run, because I don't really want to follow the company too much. This one here is not causing a lot of stress. And I think the quality of company, even though it's in the shitter in comparison to AMD and Nvidia, it's a different class than Shopify, where Shopify could potentially turn into something. I think that Intel is something. It's just a matter of whether or not they're going to be something really, really big down the road again.
Agreed. 100% agreed.
So it's just there's different levels to the game, right, based on your underlying. So why don't we look to see what a roll looks like, Amit, and then kind of let the math tell us what to do. Fair enough?
Fair enough. So we would click roll this position, and we're going to, so what do you suggest? 35 days?
Yeah, it's gonna take, just based on how deep in the money we are, guys, you're gonna know how much time you need to throw at it. So in my opinion, it's gonna be 30 to 45 days. But here's the thing that you also have to contend with. Intel pays a very small dividend. So whenever you're dealing with a dividend paying stock, you also have to contend with ex-dividend dates, because that's going to position ourselves to potentially have these shares get called away early. And that is what I'm actually trying to accomplish. The best case scenario for me is to roll out, get a credit, and then have the shares called away early. They do us a solid. Now they free up our capital and we can go play somewhere else. because they're willing to eat that extrinsic value, because in their mind, they're thinking, well, the dividend that I'm going to receive is going to eat away at this extrinsic value. And we just made a lot more money from a premium per day perspective.
Right.
So there's a lot going on in my head whenever I do these little deals. You know what I mean? So I did it 35 days out, August the 16th, and we got to make good on $338 because that's the current price of the option that we're in.
Right.
Correct?
So we have to buy to close that 338. Remember, so we sold this contract a month ago to someone for less than 340. Obviously, the stock has run up. It's appreciated to 340. So we have to pay back the 340, but we want to collect more than the 340, which means we have to find a contract that pays us enough to cover that.
Yeah. So we open up, if we open up the actual contract again, we received an average of 93 cents. So after 31.93, which is our break even, we no longer participate in capital appreciation. So whenever people want to say, well, you're leaving money on the table with covered calls, this is the scenario that they are talking about.
Right.
We are legit leaving money on the table from 31.93 to 34.41. We're like, the kids are at play and we're in timeout. We can't.
Right. And real quick, for those that are saying, well, why did you even sell the covered calls then? It's because we're not Nostradamus. We didn't know Intel was going to pump to 35, but it did, right? So now we're navigating that situation. A lot of times Intel stays flat like it has for the past 6 months. And so it broke out. Okay. But if it had stayed flat, then whoever bought those calls would have paid us 92 cents for essentially nothing. And we would have collected that. So that's the, as TJ says, the gimmies and the gotchas of covered calls.
And also the other reason that we sell the covered calls is because we did not get assigned these shares. We bought these shares of our own volition. So we sell the covered call to bring in some premium in the form of a rebate, if you will. That way we're lowering our adjusted cost basis on the shares that we own, because we're kind of protecting ourselves to the downside with this premium right here. So we received, $2,330 in premium. So that's almost like $1 of capital appreciation if you really want to look at it.
Right.
And then we also received the money from our average cost of the shares, which is like $30.70 or whatever it is, to 31. So we make that money times 2,500 shares. So this is a very profitable position. This is a positive problem. So now the question becomes, do you just want to take your ball and go home? Or do you like the way it looks here? Do you like the landscape for the next 30 to 45 days? And we want to stay in it because the cardinal sin in wheeling, more than leaving money on the table, guys, this is your gold for the day. Is you don't turn winning trades into losing trades by staying in them too long and overstaying your welcome. You are a guest in the home, because this is a trade. It's not an investment. We're not talking about Palantir right here.
Right.
You don't want to be the guest that stays the extra day and you start stinking. You're like leftovers. You know what I'm saying? And the couple's like, but they welcome you into the home, but now they want you to get the hell out of there so they can live on with their lives. Right? So you don't want to overstay your welcome on some of these trades. So what are you thinking? Because I've already looked at it a little bit on the roll, and we can't roll for a credit. We can roll for like a break even, or we can roll sideways and get quite a bit of money.
So what is the expiration? What are we looking at? So August.
We're looking at 8/16 because we don't want to go too far out, because I don't want Intel to come crashing down to like $28, and then we're like, shit, man, we could have just locked in that win, and now we're playing from behind. You know
so
what I mean?
what is the strike we're looking at? 30.
So we can go for 31 to 32, and that would actually cost us like $125, or we can do it to where it would be a wash. So we don't make any money. And we're essentially betting that Intel is going to stay above 32 by, an 8/16. That way we're now qualified for an additional $2,500 of capital appreciation, because we're moving the strike from 31 to 32, multiply that dollar times 2,500 shares. That's the 2,500 in capital appreciation. But we get nothing now. And if anything, we got to pay a couple $100. My suggestion is not to do that. My suggestion would be to roll to the same strike price, just add more time to the clock. And now we're looking at bringing in an additional $1,500, $1,600 through the door, and kind of playing for Intel to turn into Intel and come back down a little bit. And then on the next roll, we can bring in even more money and possibly go from 31 to 32 at that time, because I don't have any fear that Intel is going to go to like 40 or 50 bucks right now. And if it does, and I'm not a part of it, it doesn't really matter either, because I was never in this play to begin with.
Correct. I think that's the right play.
So that's the mindset. So what do you think?
So I think the logic here of taking the credit, the 1675 that people see on the screen right here, is because Intel
it's a bird in the bush.
Yeah, and Intel to us was always like one of those things that stays within a range. And so, I mean, again, this is just the idea is Intel comes back down to 31 because it historically does. If it runs to 40, all right, you missed it. It is what it is. You move on and you take your profits and you keep going. But if it does what Intel does, then you qualify for more capital appreciation because we can roll out later. And then if we roll out to 32 in 2 weeks or 3 weeks, it'll cost us way less than what it's costing us right now. And we collect all this premium in the meantime. So I think that makes sense.
So we stay at 31. It looks like we can probably get it filled right now at 67. We could fight it out a little bit longer, but it's whatever. You're like walking over dollars to pick up dimes. So we'll see what happens. We'll put it there and let it do its thing. And maybe we bring in another 1,670 bucks. So we didn't quite get all the way to 32, but we got to like 32.70 or whatever it is. You know what I mean? Because you got to look at your adjusted cost basis. We've already got $2,300 locked in. We're trying to lock in another 1,600 and some change, and we'll go from there. So we'll let it stew, and then we'll see what happens.
I think that makes sense.
So let's move on to another trade.
And guys, if there's any questions on what we did on that, just put it in the chat, and we'll answer any questions. And let us know. One question here is, what happens when a company you have leaps on goes bankrupt and delisted? You lose all your money. I think that's unfortunately. Don't buy leaps on a company that's going to go bankrupt.
Right.
I've not done that with leaps. I've done that with stock before on some stupid biotech. So it is what it is. Everyone has their phase.
So now I think we look at Nvidia. This is a covered call that has really worked out for us. We collected $1,152 on it. We could close it out for $3, or we could leave it alone, because I don't think Nvidia is going to jump $11 by the market close today. Could happen. It's very unlikely because markets don't usually skyrocket on Friday. So there's that. Or, we could look to roll this and put it on again, protecting to the downside. Or do you want to leave it alone and then maybe hope for a nice green day next week and try to sell it again so that we can try to approach this $140 strike price again? So those are the things that you got to consider here, because an ideal scenario here was when Nvidia was at like 135 or so a couple of days ago. That would have been a good time to roll, because then we could have gotten a lot more credit than we're going to get right now, because Nvidia's, kind of cooled off a little bit.
So we could either roll this 140 is what you're saying and collect credit, or we could just take profits.
Well, we say the trade's going to come off the books regardless here in a few hours, right?
All right.
Because it expires today. But what
so you're saying you want to write more calls on Nvidia, essentially.
Right. So this is where you got to maybe study the technicals a little bit and follow the story of the company to see, do they have any upcoming catalysts, or this is strictly macro play for you right now at this particular juncture with this trade? Like, where are we at? Like, what do you feel like Nvidia can pump from here, or do you think that there's a higher chance that it's going to go down? Because if there's a higher chance that it's going to go down, then it makes sense to sell the covered call now, because we're going to maximize the premium that we bring through the door. But if you think that it's going to pump, then you wait to sell the covered call so you can maximize the premium that you bring through the door, but you're also playing at a higher strike price, so you're qualified for more capital appreciation. But we have to consider the entirety of the play. We own these shares at about $132.
It's interesting. They have earnings in August, so that's the binary event. But that's late August. We still have a month left, so I think 140 by the end of June, or 142-ish, is not crazy to write those covered calls.
So you're saying you want to maybe try to take advantage of some implied volatility right now, and
but not into earnings, but the month before earnings, essentially.
So the first thing that we can do is we can just take these off the table right now.
Yeah.
By doing, so we can go buy to.
So what we're doing, guys, is we're giving back $3 to the market because we have to buy to close these contracts. $1 a contract.
So we're not officially doing a roll is when you simultaneously buy to close and sell to open. We're not doing that. We essentially wanted to take the trade off the table so that now we have a clear head and we can talk about it.
Yeah. So now let's look at the covered call premiums on Nvidia and see
Right.
what
So
the market's willing to pay.
we go look at the actual position. I'm on the laptop, so it's a little tougher than having the mouse. So here's Nvidia. So the number one thing, guys, is just real beginner stuff. Don't be selling, and I have the bankroll and the skill set and the temperament, so I get away with a lot of shit. So I'm always real careful to say these types of things because I don't want y'all doing what I'm doing because it could easily blow up your account because you might not be able to handle the stress. So don't be selling covered calls below this number right here. Whatever that average cost is, forget about your adjusted cost basis. That's a totally different shit. Has nothing to do with the price of tea in China, if you will. Look at that average cost right there and make sure that your covered call strike price is above that. If you do that, no matter what happens with the stock and shares get called away, you made money. Those are just mathematical facts.
Right.
So just throwing that out there because a lot of times y'all will see me in the portfolio where within phase I own the shares at 139 and you see cover calls at 115 and I'm rejoicing. Don't do that shit. I'm going on year 5 on this journey. So I just don't want people blowing up their accounts because I want to sleep easy at night. So anyway, so this is where we're at. We're down $1,000 on the shares. So do you want to protect to the downside by selling a covered call now? Or do you think there's a lot of room to run with Nvidia right here and you want to wait till it runs a little bit and then sell the covered call to maximize the premium and the strike price? That's the puzzle that you need to solve right now.
It's green today. If you had to put a gun to my head, I would say Nvidia goes down versus up, just given the CPI data we got yesterday. So I wouldn't mind selling covered calls today versus waiting for it to.
And I think that you've got the absolute right mindset. I always sell the covered call as protection to the downside because I can always manage it to the upside.
Right.
So I'm like, I want to bring money through the door, bottom line, because I don't like having renters. I don't like having a rental unit and not a renter in it. But
yeah, and if someone's willing to pay us a decent amount for like 142-ish in 35 days, I don't think that's the worst thing.
Yeah, well, let's look to see what happens, right? So we'll go.
Wow, someone's willing to pay $6 for a 212 call. Like people are really bullish on Nvidia.
It's crazy. So let's go. Let's try to stay in that 140 range or so. 140, 140. We'll look at it. Let's look at it here. So 142 is pretty juicy. Look, we get almost $1,000 there at 142, or we can get about 1,200 at 140.
I like 142. I mean, I think that's a little bit more protection from 140, and $1,000 is not bad.
More upside. It's a 31 delta, dude. The 142 is still very aggressive. I like that, Amit. I like that a lot. I like me some Nvidia. I wish I would have listened to you. You told me to sell more puts on Nvidia, and I wished out just to call me out, right? It happened.
Oh no, we did. Well, we did good on those puts, and now just the cost basis is nice. All right, so 3 contracts at what we're gonna do 370.
Yeah, we'll do it right in the middle. It was 369 just to make sure make them feel like they're winning. So
what we're doing, guys, here is we're getting $3.69 a contract times 100 shares, $369 a contract times 3 contracts. That's $1,100 in premium. This is why I like wheeling options, and I'm trying to learn it more in depth because it's a way to bring in cash flow without just buying and holding. And there's obviously ways you have to manage it because it has risks, like any business has risks. But it is one of those things where if someone's willing to give me $300 to bet Nvidia is going to be 140,
what was
hold on. Yeah, I just muted you. In 3 weeks, I'm willing to take that bet. And then if Nvidia does get to 142 in 3 weeks, if I do have to sell my shares there, okay, that's fine. If I can manage that position and roll it out and buy some more time, then there's a way to manage that as well. So I think the big thing here is just being unemotional on the company. Like if this was a company I really, really cared about, then I'd be a little bit more hesitant to sell strikes that are as close as 142 from 130, which isn't even that close. But if it's like, I don't, Nvidia is awesome, but I don't care about it that much. So if we do have to sell at 140, it's like, all right, we sell at 140, and it is what it is. So that's what we just did. TJ, you're back.
All righty. So that worked out, dude. So we got a 132 strike just to walk through the entire trades because Nvidia's been a good one, dude. And we bought, essentially close to the top, right? So it was a very risky trade when we took this whole thing on. But when you're dealing with a high quality company that just wants to run, I mean, you can just participate. So this is all we did right here. We bought the shares for 39. We sold the covered calls immediately as protection. So we got 11.55 through the door. And then we sold cash secured puts, 23.10. We bought to close those puts. We gave back 84. So we locked in a massive win there. And you guys can see that we gave back the $3 here on the covered call. So we realized $1,152 on the first round of covered calls. And then we just picked up another 1,110. But the beautiful thing is we went from a 140 strike to a 142 strike. So now we're qualified for $2 more capital appreciation times 300 shares. It's another $600 of upside.
Right.
So dude, this has been picture perfect to me. Picture perfect.
And our adjusted cost basis is now close to below 120 on Nvidia.
Yeah, I'm not tracking it like that, but that's exciting.
It was 122 3 weeks ago, but because we've collected premium, I'm sure we're getting below 120. Which that's the other thing about doing the strategy, guys, is like if you can lower the actual cost basis, even if it's not the literal cost basis on your brokerage, but if you keep track of it and it goes down based on the premiums you're getting, that's a way to artificially get a better average, even if even if you got the top of the stock when you bought it.
Agreed. So what is another one of the plays?
So let's go to Hood. Let's go to Hood because Hood is tanking right now. Tanking meaning it's down 2%. For those asking in the chat why it's down, I actually don't know. I've been on the stream. I haven't had a chance to look at anything, so I'm not sure why it's down. But TJ, if it's down 2% today, I would like to see what the $20 strike looks like in a month from now because I don't think it's $20 in a month.
Well, we have 50 contracts at 21.50 right now, and that's what it's paying, 76 cents. Because we're already in this play and we're up. We got 82 cents whenever we did it at 20 at we did it on 7/5, so last Friday. And they expire for 7/26. Are you saying that you want to put more? So you kind of want to run like a little bit of a stagger or ladder, if you will?
Yeah, I want to see what the premiums look like for if there's anyone better premiums on a different strike. Maybe there's not, but that $20.50 range, I think that's a decent range, especially right after earnings. If we could play the volatility on that.
And earnings are the first week of August.
Earnings are August 7th, so maybe we do August 16th. See what that looks like. We also have CPI right before Robin. So I mean, we should have another catalyst of better inflation data coming down. Someone said, does the premium returns show up on your percentage return? Yeah, that's a good question, TJ. So the premium you're getting, that's factored into like your year-to-date return, right?
Yes, it's all like because whenever you're selling options, it's going to be a combination of the cash on hand, like your investing balance is a combination of your cash on hand, your current market value of the shares that you own, and where you stand on the open derivatives contracts.
Right.
So that's your take and ball home. Your take and go home, take the ball and go home price, your liquidation price. That's what the investing value is. So that fluctuates because it's it's like it's moving, right? because we're live right now. So depending on what the market does.
Right.
So you want to go August the 9th? Is that what you're saying?
August 16th.
August 16th, okay. Bear with me, guys. I'm not going to be as fast here because the connection's not as great, and then I'm dealing with the. Wow!
Yeah, look at that! Wow. At 20, see, I had a feeling that's right after at 20. I think that's a nice $1.06 for $20.
Yeah, I like that.
If we have to buy it at that break even of 19, I don't mind that.
Yeah,
25 of those.
You want to do another 50? That's juicy, dude.
I mean, I like that, dude. Right after, and look, if the roll on that is going to be easy because the range it's going to be in after earnings, I think, is low 20s to high 25s. So if it tanks to 19 or something, the roll on that, the premium we could collect because the puts would be printing that day, and we could just extend the contract to September. I don't think that's a bad idea at all.
Yeah, dude. I mean, we're getting 5%, dude. This is $100,000 of collateral.
Yeah,
tells you right there. Yeah, dude, I think it's a no-brainer.
I think it's a no-brainer. That's not bad.
I think it probably already filled. No, it hasn't filled yet. Bastard.
Might have to do 105 on that.
Yeah, I'll fix them on the phone here in a little bit because I can manipulate these on the phone to get them filled over here while we're doing it. We'll keep it going, but I'll get that one filled for us. What else
So
do we have?
those
We have
were
American Airlines. You want to talk about this one right here?
yeah. Let's talk about American Airlines.
I shoved this one down your throat.
Yeah. So TJ texted me. He said, "Hey, airlines." I said, "Well, everyone's traveling, so sure."
Yeah, you're not going to get Chris Patel level DD over here, okay? I ain't got that kind of time. Chris is a lot more bored than I am, okay? So
TJ was like, "Hey, people are traveling." I'm like, yeah, there you go. That's your DD.
We're gonna bank on wheels and doors staying on this month, admit, okay?
Oh my god.
Shit's
There's not a
crazy.
controversy with wheels and doors on American.
So anyway, dude, so we got 32 cents. We've done 125 of these bad boys. It's out of the money, but it doesn't look good because it was probably at $11.50 or so when we entered into this trade. So that's why it shows that we're down on this deal. What are your thoughts on it? I mean, we're obviously not going to do anything with it right now, but it doesn't really stress me out, even though it's like right there.
We sold puts on this, right?
Yeah,
Or
125 of them.
And our strike is
10.50.
Okay, and I just can't see the current on your screen. Our current is 10.67. Yeah, I think we leave it. I mean, we're still out of the money, so
yeah, I don't think we have to do anything.
Wow, Tesla's 248. Goodness, we got to talk about Tesla, TJ, after. But Palantir's still 28, guys, and Tesla just Elon just tweeted he announced a new version of the Model 3. It's not like a new car or anything, but I mean that is good news, I guess. So Tesla going green, not bad at all.
So just to keep you guys up to speed, we did pick up the money on Intel and Hood. So you guys will see that there. So you'll see them on the scoreboard. So you will see Hood here. The $20 puts are on the scoreboard. And we're ready to pick up $1.03. So we got them filled at $1.03. You guys will see the money, 51.50. So we tied up 100 grand for however many days that is. So it's probably about at least a 4.5% return, I would say, Amit. It's 100 grand in collateral.
Yeah, basically. And again, the reason we're comfortable on this is because I understand Robinhood. I do not think the company is worth $20 in a month after earnings because I've done the math on earnings. I know what it's going to look like. So it's very confident doing that. I don't have the 100 grand of collateral. That's where TJ comes into the picture. But that helps us. And if it tanks on earnings, which I already know how the earnings are going to be. So in my head, I'm like, the only way it tanks is if the market just does something stupid or Bitcoin collapses. Then yes, I want those shares at that level, or I want to roll those shares at the same strike because I know in the next 3 to 4 months, it'll be above 20. And the premium I'll collect for waiting those 3 to 4 months will be exceptional because the market will pay a premium for those puts because the stock goes down.
Absolutely. And then we picked up $1,500 on the roll for Intel.
Oh, perfect. We got that filled. Okay, cool. So we picked up 7,000 today so far, essentially.
Yeah, and then the money on Nvidia. Yeah, so it's been pretty good.
8,000. 8,000.
Yeah, man, maybe I can upgrade my suite over there to Marriott.
Basker says, do we need to pay interest to Robinhood for our collateral? No. So when you put up that 100,000 that TJ put up in collateral, he doesn't get 5% on that money, right? Like that 5% APY because it's being used as collateral. He's technically getting the 5% from the put premium, but Robinhood doesn't charge you anything to use that as collateral either. So,
correct.
And then no brokerage will, quite frankly. So.
No, so there are brokerages that do pay you money for tying up.
Yeah, some will give you 5% even if the money is in collateral.
Fidelity and Charles Schwab.
That is a hell of a feature, dude. To put up 100 grand in collateral and Schwab will still pay you 5% on that money. Yeah, there's another thing too. I was talking to someone else. She said like $15,000 worth of collateral. She has a deal with Schwab where she only has to put up 20% of it. So she would put up 1,500. And if she gets assigned, then she would have to put up the rest. And I was like, wow, that's a hell of a deal, dude. Because I
have a question for you because I'm looking at these Hood puts right here. We just got paid more money for selling the 20s than it would take to close these 2150s. So what do you think about marrying these 2150s to 20, make it safer, and we actually bring more premium through the door? Or do you want to write it out here at 20?
No, I like that. I like that. So you want to roll this down and out to 20 is what you're saying.
Yeah, so we'll do that for credit, and it's less risky.
Let's do it. I like that.
And then we marry those contracts. It's one less position to look at. I do things that mathematically don't make as much sense. It's 816, right? Was the other one?
Yeah.
I do things just because I want to make it easier for me at the end of the day. I don't think it's 816 because I don't see the other trades.
No, it's 816. It's 816.
Oh, here it is. I see them right here.
So it costs 70 cents to close it. $1.02 we'd get in premium, which means we'd net 30 cents times 50 contracts. So that's $1,600.
So we make $1,500, but we release $7,500 in collateral.
I like that. So in one move, we got back 75 hundo that we can put somewhere else. We collected 15 hundo. We married a put at a 21.50 strike to a $20 strike. So we have $1.50 worth more of margin there in case Robinhood takes a nastier dip, and we got paid to roll. And now we only have one position to manage over two.
Right. And it was profitable.
And it was profitable.
These are all these little nuances that I'm trying to show y'all, man. I'm trying to show y'all all the wrinkles here. Hopefully you guys can appreciate that I walk y'all through the thought process. Because there's a lot of times that I'm making moves in the portfolio and people are like, why are you doing that? So I'm trying to like talk it out for you guys. Because this shit is like second nature for me already. So you'll see there that we got the 5,100 for the cash secured puts that we sold initially. And then we rolled out and down, which is the dream for a credit on a cash secured put. So took a lot of risk off the table by freeing up $7,500 in capital and collateral, but we picked up a $1,500 credit in the process. So just that alone right there is $6,600, whatever that is. I like it. I like it. It's been a very profitable morning. Dude, I have to cash app you $50 here in a second.
No, dude, the education to me, that's worth more than anything.
Yeah, but it's always nice to have a paid internship. Just saying. And they pay me with experience, dude. I remember they tried to sucker me with that at Wall Street for Goldman Sachs. And I was like, bro, take your experience, shove it up your ass. I live over there in Brooklyn Heights, and they don't take experience for rent. You know what I'm saying?
No, but generally, the experience here is there's not a lot of opportunities where you could to work with real money. You know, you can't undercount that this is a real 5.6 million.
I know, but I mean, I just like that I've always been generous with your channel.
Yeah.
But anyway,
so real quick, let me guys, TJ's channel, let me put it in the chat. Please make sure to subscribe to him as well. While I'm doing that, TJ, can you show us what the hell you're doing with Tesla? Because we ran up to 270, it came back down, now it's back. What's going on?
I rejoiced yesterday, bro, on the live.
You were happy it was tanking? You were so happy. Did you text the Bloomberg guy to make the article?
I was literally crying tears of joy because this shit has been a pain in my ass, bro. And now Elon turning into Elon. That was like the sledgehammer moment with the Cybertruck yesterday. It was beautiful. It was beautiful for me. So on the shares, things are good, right? On paper, up 130,000. It's not as much as we were because Tesla came down from like 270 to 240 yesterday or whatever it was, 230s, I think, this morning. So we have covered calls. Yeah. We have covered calls at 225 for January. So those gained about $70,000 or $80,000 in value yesterday because I'm so underwater on these, dude. This is like, there's underwater, bro, and then there's like underwater down there with the fucking Titanic. You know what I'm saying? Like these are like way underwater with that.
By the way, Titanic top 5 movie of all time? Yes or no?
Dude, this thing is underwater, bro, like 2-3 miles deep in the ocean. You know what I'm saying?
You did like my puts are top 5 worst puts or calls. Okay, so how are you navigating? How are you going to manage this?
Right now I don't have to do anything because they just moved they moved the goalpost, right? It's what Elon does. And I think it's now October. Is it official? I don't know if it's official. I know Bloomberg put something out. Elon didn't.
Oh, hold on. It looks like Elon just tweeted. Elon, hold on. What did Elon say? Elon, let me check. Elon just said the legacy media is a propaganda machine. Let me share my screen real quick. That might mean TJ gets into more pain because that might mean he didn't say Bloomberg's false yet, but he's saying, hey, basically read between the lines, don't trust the media. That's what he's saying right here. If that's the case, then yeah, maybe Tesla's going to keep pumping. Maybe.
Could be. So what I'm doing is I'm going to stay put here. But what I have been doing in the interim is I've been selling put credit spreads, cash grabbing, so I can stack some premiums with the anticipation that at some point this is going to probably, I mean, I'll always be able to roll for a credit if I want to, but if I want to increase my strike price, I'll have to, like substantially, I'll have to do that with a debit. So I'm going to try to stack credits here by selling put credit spreads. So I'm going to start selling very aggressive put credit spreads because it takes less capital to make a very huge return as far as ROI goes. And if the put credit spreads get challenged, I have the capital to turn them into regular cash secured puts anyway. And if that is happening, then my cover call is recovering.
Right.
So I'm creating a different level of strangle with Tesla, but I don't want to just write out cash secured puts because that ties up all the capital. So I want to have the optionality to be able to do, you know, something else with that money and not allocate it to Tesla until I have to, because I'm doing put credit spreads over there in the I'm doing them over there in the 210 range, right here, 210 and 205. You guys can see that one right there.
Yeah.
And I'm very, very interested in Tesla at 210. And this is only 5 contracts, so I would just turn around and, you know, I'd buy to, like if it tanks, you buy to or you sell to close the long put, because that one's going to print, because that's the insurance that I paid for. Right. And then I would turn the 210s into regular cash secured puts at 210, and then I could manage those, roll them down if necessary. 200 or 197, right where I own the shares, that's my acquisition price target to take ownership of more shares. And if that's happening, well, then my covered calls are starting to print. Like I'm totally out of, you know, I'm not necessarily making it back up to the surface at that point, but we're getting close.
Yeah, this might be going over some people's heads in terms of not understanding put credit spreads, which is okay. But the point is, you're manufacturing a way to still collect all the upside you're losing out on, given Tesla's running right now.
Yeah, it was some. I mean, because this was only, you know, only got $350, but this is on 5 contracts. On the next run, I'm gonna increase this to 15 because I have 15 leaps that I'm selling covered calls against. So those are the ones that I'm really trying to protect, because I want to make sure that I'm already in a position to take ownership of 1,500 more shares, because I want to protect the leaps, because we're up almost 6 figures on those leaps.
Right.
And I don't want to get exercised prematurely because there's an idiot on the other side of the contract that I can't control. So I'm just protecting myself. And then the other thing that I'm doing, announcement time. Are you ready?
Is a new stock? You got a new position?
No, this one's good for you if you're really serious about taking advantage of this experience.
Okay.
You see Enphase right there?
I see Enphase.
So you see the strike price is 115?
That's your covered call or your put?
For next Friday?
Yeah. Oh, that's a covered call for next Friday. Yes. Okay.
And it's in the money?
Yes, it's in the money.
I might let those shares get called away, and I'm going to move that money over to your project.
Oh, wow. That's $1 million, TJ. That's wait. So, okay. So you would be letting, so for those that don't get it, he would be letting 11,000 shares on those 115, 111 contracts, or 110 be sold at 115. And you would end out with a net profit, even though it says your average is 139 because of the premium you've collected, and you'd free up $1 million.
Yeah, my adjusted cost basis is like 111, so I don't make a lot of money. But the reason is because your project has actually inspired something for me, Amit. I want to go like 70% cash, because there's a lot more money just selling cash secured puts and cash grabbing, because we have a watch list of 10 to 15 stocks that at any time present a pretty awesome opportunity to be getting, 2 to 4% a month on our capital, and you have less drawdown in the portfolio.
Yeah, and also Enphase is just kind of, it's just not that exciting, dude. It's solar panels, interest rate.
Well, I mean, I have a lot of that, and keep in mind, I'm going to buy leaps on Enphase, so I'm going to maintain the exposure to Enphase. I'm just turning the the shares into Leaps, and that's going to free up about $800,000.
Right. Right.
And
So so if Enphase runs to like 150 or something, you're not going to miss out because technically you'll still have exposure.
no, I'm good. This is just more capital efficient way of doing it, but I'm also locking in a tax harvest that I desperately need.
Yeah.
Because I would lock in loss on the shares, so we'd have more money. So here announcing we now have $1 million to work with instead of 500,000.
So now when Palantir's struggling and someone needs to buy 50,000 shares, I'll just give you a call. I'll be like, TJ, this is my money. This is what I want you to do. I need some content for the channel. I need to get above 28 bucks. Let's, I'm just kidding.
Y'all know why Palantir is struggling, right?
I would just say because it's run too quickly. That's why.
No,
it's struggling because of your call?
Because I sold 50 cash secure puts at 26. I announced it on Twitter. I said, y'all have been way too fucking sanguine over there on Amit's channel. I'm gonna put an end to this bullshit, and I'm gonna sell 50 cash secure puts at 26. You're welcome. All of you cover calls that are underwater, you're welcome. You are welcome, because these are gonna go under pressure because it always happens to me. And I'm going to save the world, bro. I put on my fucking cape and I said, I'm going to go save the world because everybody's complaining about their damn cover calls on Palantir. You don't have to worry about it no more. This is just going to tank, bro. It's going to tank.
So how much you got paid? 125 times 50. So you got paid $5,000 basically.
62.50.
62. To buy, do you want to buy Palantir at 26 or you're just
24? 24 is the absolute most that I'm willing to pay for Palantir. So I'll manage the position, but in the interim, why not cash grab on the third highest conviction stock in the market for me?
Well, dude, it's maintaining 28. I know you got a month out, but if they crush earnings, 26 is going to be a joke. If they crush earnings, which is the big if, right?
And again, I'm trying to collect premium and capture premium because I have the $12 cover calls that are underwater. So I've been trying to stack my premiums. Dude, I've made about $80,000 in premiums, realized premiums on Palantir off of the last two earnings. So this is just the start. Like, this is going to turn into 200 contracts. It's just a matter of time, because I want to grab premiums so that whenever I have to fix the $12 covered call, I'm fixing it with their money, not my money.
So your plan is to still potentially keep those or pay the premium necessary to get out of those $12 covered calls by January.
So remember, we did the exercise where I'm willing to give back 20 because I'll qualify for $40,000 more of capital appreciation. But now I'm like, well, fuck 40. Why not go for 50 or 60? Especially if I could do it with somebody else's money. So that's the game that I'm playing on Palantir. And then on top of that, I want to increase the sizing of the position, because I didn't finish telling you what ultimately I'm trying to do with the portfolio is I'm turning just about everything into Leaps, and it's just going to be SoFi, Tesla, PayPal, Palantir, and Riot as far as share ownership. Everything else will be Leaps, so I can free up a lot more capital to sell cash secured puts, because I need to keep realizing wins through the door because I want to get to $10 million. And I just feel like these shares can go up in value, but if we sell cash secured puts, the account will go up in value, and I'm betting on the will versus the can.
So let's talk. Yeah, no, that makes a lot of sense. Can we go to SoFi? Because if this thing goes up even 40-50%, you're going to make $1 million or something, right? You're going to make some money. So this is run up. This is the one you definitely want to keep as a staple of the portfolio. How are you navigating this run up to 680?
Yeah, I mean, I'm good. I mean, we're enjoying that we're not as underwater on the shares, first and foremost, because we own these shares at 774. But I've already started the transition on SoFi, because I am going to turn some of these shares into Leaps as well, because I've already done it. I've got 600 Leaps over here at 10, 7, and 5 for January 2026. Right. So that's already in place. I'm going to turn that into 1,000 Leaps. I got to buy 400 more. And then we've got covered calls at 7 and covered calls at 750 for August the 2nd. And then we also have 700 cash secured puts for August the 2nd. So I rolled these recently because these expired today. These contracts expired today. They would have expired out of the money, but I saw the writing on the walls, and I was like, well, I got all of those covered calls that are potentially going to be underwater on 8-2. So let me bring some more premium through the door on these easy cash secured put money plays so that I have more I have the other people's money to work with to fix these covered calls if they get under duress. And I picked up, you'll see the money on the roll. I picked up 5,800 3 times on the rolls because you can only roll 200 contracts at a time on Robinhood if you're collecting more than 25 cents a share. So I got 5,800 3 times plus 3,000. So it was like 20,400, I think was what the math was. And if you look at that position, Amit, if you look at that cash secured put, that's how much I got on the roll. Look how much I have to pay to close it out. It's about like right there. You know what I mean? Right, so it shows that the other one would have been at about 95% profit because I had gotten $14,000 on the initial set of cash secured puts. Right. So I could just close it out and be done. But I'm like, well, I could kind of use that 22,500 because I see the writing on the walls with these $7 covered calls and $7.50 covered calls. So I'm always playing the premium game, dude, in every sense of the word. Because I think we can agree that these $7 covered calls are under pressure and these $7.50 covered calls are going to be a little bit under pressure. And both of those are below the average cost basis on the shares. Now, my adjusted cost basis is like in the 4s and 5s. That's irrelevant. I always look at when it comes to actually sell the shares, I want to be selling above my average cost if I'm not trying to lock in a tax harvest loss the way that I am on Enphase.
Right. The SoFi $7 call. So you're betting on earnings because it's right after earnings that SoFi is not going to be above 750.
No, I think that it will. I was just trying to maximize premium, but I was also protecting to the downside because guys, you can't play results oriented wheeling. Meaning you already know the answer to the test and now you're going to tell me what I should have circled, right? We got to look at where the sentiment was whenever I sold these covered calls. Shit's not been good for SoFi for a long time. And I put a big old post on X and everybody's ass is fucking butthurt, right?
I thought you had the best take of the week, by the way. I don't know if you heard my market open the other day. I said, TJ, we even shared your tweet. I said, TJ's take about Noto not talking about a bank, but wanting a bank multiple is the best take from that interview.
I mean, bro, how in the fuck are you going to give them a multiple? We don't know what the fuck Galileo really is or does and what they have in the pipeline. I mean, dude, they got to start changing the narrative. They need to have their Tesla moment. Tesla has been saying we're more than a car company for the last 5 years or so. People are starting to believe them now because these cars practically drive themselves around. The fucking robots are coming. They get mega pack deals, the energy. They got a lot of other shit going on. They happen to make really cool cars too. And right. I think that SoFi needs to start saying, hey, we are a technology company that happens to have a banking charter as well. And that needs to be the narrative that they start painting, and they need to start coming correct with the Galileo revenues in order to command these crazy multiples that people preach and teach on X. Because at the end of the day right now, dude, SoFi is one of my favorite stocks, but it's still a little overhyped and it's a little overpriced for what it is.
Well, so if it goes to 750, let's say $8 on earnings, what do you do with the calls? Do you let them get sold or you just roll them out?
No, dude, I know. And I'm long these shares, bro. Oh man, I'll gladly go to the Titanic with them and hope the fucking vessel doesn't burst. You know what I'm saying? I'm gonna be those people visiting the Titanic. So we're in this thing. We're in this thing, but I have to be responsible and I brought about $50,000 of premiums through the door between the covered call premiums on the 7s and the 750s. Because they can't be sitting there on a $250,000 fucking loss and not do anything about it on the actual shares.
Right.
And then now we're making money on the cash secured put. So I'm just strangling the shit out of the stock and kind of letting the investment thesis play out. But at the same time, I just want people to know where my mind is. And this is where it's been all along because, dude, I try to dig and I'm not real good. I'm not an archaeologist like you guys. I don't know how to find shit like Chris Patel. I'm not that bored. You know what I'm saying? But, dude, I can't really find much on Galileo. Like, truthfully, I can't find shit. It helps money move, whatever the fuck that really means. I'm just saying, it's ambiguous at best, bro. I don't know. Like,
but that's a good point. You
bank and who the fuck is it? Like, why is it so secretive? Like, what are we talking about? Are y'all like out there on a mission to kill Bin Laden? Like, we knew more about what Navy SEAL Team 6 was doing than you guys. Shut the fuck up. Like, I feel like the reason you're not talking about it is there's not much to talk about. I don't know. Call me crazy. I'm not being embarrassed. I'm just realistic.
No, you're not crazy. The average person should know what Galileo is if that's 20% of the revenue growth. And number two, Last time I heard of Galileo, it was like the telescope thing. It wasn't he a guy who made the telescope or something like that's the I need to associate it with B2B API for payments, and I don't do that at all.
But I'm just saying, if you're claiming to be the AWS of fintech, you want to get SaaS type revenue or banking as a service revenue multiples, whatever this financial technology hybrid valuation is going to end up being. I think you need to start leading out with that narrative. Am I crazy, Amit? I mean, have I lost my way? Because I don't know.
No, you're not. I asked Tanner about this yesterday, and Tanner agrees. Tanner says we need to talk more about it. So I think
the reason I think they don't talk about it is because they don't know about it. That's what Chris Hager told me on the tweet.
I think so as well, but Tanner's saying Tanner's saying they're waiting for a low interest rate environment to start pushing out more innovative products. And I'm like, all right, I guess then 2025, that's when they.
All I'm saying, dude, is everybody wants to say that SoFi is more than a fucking bank, but everybody that covers SoFi on a regular basis, the only thing that they talk about is how great their banking metrics are. So I'm like, dude, when's the last time you heard somebody with Tesla bragging about the fucking horsepower of the car, bro? We already know they're fast. That's established. We already know that, dude. My son's got one. I pray to God every day he doesn't fucking wrap it around the telephone pole because that shit is faster than it needs to be, in my opinion. But he ain't talking about that. He keeps talking about the fucking technology associated with the car. He's like, Dad, it's a fucking iPhone with wheels. It's crazy. Your car's stupid. Why'd you buy the Porsche? Like, he's always making fun of us because Tesla gives you more value as far as the car ownership experience. And so I don't know, but I feel like some people maybe don't think that I'm as bullish on SoFi. That's not the case. I'm bullish.
You got a lot of shares. So.
I don't want to buy into the bullshit, though. You know what I mean? Like, Galileo's the thing. That's really the quote unquote moat, if you will, because the moat's suspect at best right now, right? I mean, dude, like, tell me a little bit about this moat. Like, is there alligators in there? Like, how protected is this castle? You know what I'm saying? give me something to work with. So that's SoFi in a nutshell, dude. I'm off my soapbox.
Can we look at PayPal? What are you doing with PayPal?
Yeah, oh, dude, PayPal for you guys might be Pain Pal. For me, it's PrayPal. I'm praying this thing goes up because I'm in a real good spot with PayPal.
Yeah, you got the bottom kind of.
Yeah, I mean, that wasn't on purpose, bro. This was an accident. So. So I'm sitting on 10,000 shares. This position's full. I don't want to add any more to it. So it's 10,000 shares at 58.79. So I'm officially up on the shares a little bit. And then we've got covered calls.
That's cool though. When you have 10,000 shares and something goes up $1, you make $10,000. Like that's actually really cool, dude.
Yeah, but on the other side of things, when you have 170,000 shares of fucking SoFi, you can make or lose 170,000. So that's in context. So that's what SoFi. I feel like I have a right to ask some fucking questions. You know what I'm saying? Like I can't even get a cap from these motherfuckers. Like, tell me something. Like, tell me something about. So anyway, I'm back on the soapbox. God dang it, a minute. So PayPal, we got the 10,000 shares that I feel, dude, if I can't make any money on 58.79 on fucking PayPal, everybody just needs to come on here and say, hey, you got it wrong, but we did too, because y'all been touting this shit, all the YouTubers, since it was like 110, 115. It was the deal of the fucking century. I waited. For once in my life, I was patient. And I was like, I'm going to wait because the market sentiment, the growth isn't there, all of that stuff. So I finally built the position out, and here we landed. And I'm like, dude, if I can't make money here, maybe there's just no fucking money to be made with this company, but yet they're buying $5 billion worth of the float on an annual basis. Right. And then we've got the covered calls that are printing for next week. And then I also bought 100 leaps at 50. And these aren't Jesse Dow lottery leaps. These are in the money leaps where I mean business. I'm willing to buy an additional 10,000 shares in January 2026, but on my terms at my price point, which is $50. And I'm selling covered calls against those virtual shares, if you will.
Right.
So that's PayPal in a nutshell. Grade the position, Amit. What do you think? I mean, am I in a position to make money, or am I in a position to just look like the biggest dumbass on YouTube right now with PayPal in such a large position?
I think PayPal's undervalued, so I think you're going to do fine. But I've been saying that it's undervalued for a while now. But I do think this $58 to $60 range is the bottom. The other thing is they got upgraded a couple weeks ago. They had a really good fireside chat. I think this earnings is the inflection point where they show extra growth. The reason they're down is because of the Apple Pay and all this other like perceptual stuff that's happened. but I think the stock is closer to 75 by the end of the year. And so I think you're going to print on this. It just might take more time. But the leaps give you time, right? Since you have till 2026. So
correct.
we have
And
a horrible recession.
And I'm selling covered calls against those.
Yeah. Yeah.
So I feel pretty good about it. I feel pretty good about it, to be honest with you. This position does not cause me a lot of stress. The premiums aren't great, though. I mean, the premiums aren't great on PayPal. That's why you're not going to see me selling any more cash secured puts. I'd rather use that money, messing around over there with the hoods and even the American Airlines, because the premiums are just better. So this position officially is full. I'm just playing covered calls right now and hoping that it matriculates its way up a little bit.
Is there any new stocks you're looking at over the past 2 weeks besides the typical ones?
So here's the thing, Amit. Everybody's like, well, how do you land on a stock? So what I do, let's just do it where we're talking. So I think we're good here. And I'd like to maybe do some live Q&A. If y'all could put 3 or 4 good questions on here and from this series, and I'll do my best with Amit to answer them for you guys. Because without the chat, we don't have a channel, right? That's the way that it works. The chat
is very true. Very true. So yeah, if you guys have some questions, please let us know, and we'll end it out.
Very important, guys. I mean, the chat means the world to me on my little community, and I know that you're all about your chat as well. Your community is one of the best on YouTube.
Oh, they make sure to keep me humble. That's for sure. That is.
Yeah, my chat is always telling me how shitty of a wheeler I am too.
Well, they tell me how shitty of a comedian I am, so I feel like I got it worse. I feel like I got it a lot worse.
So anyway, what the hell was I talking about? I got ADHD.
How do you come to a stock?
Huh?
How do you pick a stock to wheel?
I land on a sector. And there's this sector, man, that I really, really want to be in. It's kind of like when I was in college, I had an affinity for Asian girls, but they didn't fucking like me. You know what I'm saying? But I still looked at them, bro. I undressed them with my eyes every chance I got. But they never wanted to dance with me. So anyway, my Asian girl in the stock market right now is...
Wait, let me guess. Oh, so I wasn't gonna say energy, but okay, cybersecurity.
Cybersecurity. So
okay,
I would
why?
like to land on a stock that is not so damn overvalued, because the reason that I don't dig that much is because I feel like I just can't get behind the pricing, if you will.
By the way, real quick, TJ, while you're talking, Robinhood just bounced to 2209, so I think we're printing on those puts already. So
very cool. So what do you think about cybersecurity, bro? Because I feel like the threats on the internet, every time I look up, there's another company getting hacked. So I feel like the TAM is getting bigger and bigger for the Palo Altos, the CrowdStrikes, the SentinelOnes, the Fortinets of the world, the Datadogs. There's a handful of stocks that I'm familiar with. I just don't know a lot about their company to be like, hey, let's put $100,000 on a cash secured put, because we're kind of spraying and praying at that point.
Yeah, I'm very bullish on the overall sector, but like you, I have not done enough research on why cybersecurity is going to be a multi-trillion-dollar industry over the next decade. Obviously, it doesn't take a rocket scientist to know that the world needs security and things of that nature, but I don't know enough about the industry to understand who are going to be the winners, who are going to be the losers. Like in fintech, I don't know as much as Tanner does, but I can kind of tell which companies have a shot, which companies have a moat. Cybersecurity, I don't know. I know Palo Alto is the one that is the poor man's CrowdStrike, even though they're older than CrowdStrike, but CrowdStrike's growing faster. But I agree with you. They are valued, let's just say richly, if not overvalued. So I don't know which one we would pick. That's the other problem, if you want to go deeper.
So Chris Fiorillo says...
Steven Fiorillo?
I'm sorry. Steven says that Fortinet is undervalued.
Yes, he's talked to me about this. I don't know why, though. Like, for his articles I haven't read his articles on it, so I have to read those. But
and then my chat is always telling me that SentinelOne is the play.
I don't know. I got it.
I'm just throwing it out there because you have access to a lot of people in different spaces now, because the one thing that this channel is giving you is a lot of influence, right?
Yeah.
So So I feel like you can access this information faster than I can even. And not just that, my interest in accessing information is not really there.
Well, Fortinet is down year to date. I mean, it's up, but slightly. So I think that's why Steve's buying this one, because he thinks it's cheaper than some of the other cyber names. So I think we'll talk to Steve. Maybe we should do a podcast, all three of us, eventually, and let him break down the bull case on this one.
Yeah, because I just feel like that's something that would look really nicely in the portfolio.
Okay, we got a question from Dan. How do you manage gains and losses for tax purposes? Is there a running total? For example, a $100 gain and a $50 loss, you are 50 ahead. Where does the portion of the taxes due go?
Yeah,
I think real quick, I think doesn't your brokerage just create a P&L at the end of the year? Yeah.
You can't really argue with it.
Yeah.
So you print it out, and fucking pay the piper. It's like I've already started on a weekly plan with the IRS because this shit has just gotten out of control over the last couple of years. So I mean, I give those fuckers $5,000 a week.
Wow.
Just to kind of keep them at bay at this point.
Are you paying interest on the taxes? You have to.
No,
right?
I'm not in the hole right now.
Okay.
But I feel like there is a hole there. There's a sinkhole over there. I just haven't stepped in it yet. So no, it's because I've got LLCs and stuff that everything's getting structured so that I can write off certain things. Like, I mean, y'all got to keep in mind I don't come from money, so all this is new to me, right? So there's a lot of rich people that don't pay a lot of taxes because they know all these loopholes that were established by the rich for the rich, right, with all their buddies in Congress. So I am not familiar with a lot of those loopholes, but I'm getting familiar very quickly. So there's things that I have in my life that the government allows me to write off, like the Porsche and the motorcycle. If I have promotional items for the business, trips and all this other bullshit, because I'm talking about my YouTube channel, if you will, or the little hedge fund. So these are all things that I'm learning about as we go, so that I can try to keep a little bit more money in my pocket versus just calling it what it is, right? They see the P&L and then I got to pay my, almost fucking 40% in taxes or whatever it ends up being, right?
Yeah. So the answer is, if you're wheeling, you will get a P&L from your brokerage at the end. They're gonna, if you take some losses, they'll write that off. If you have gains, they'll hit that against the losses, and then you'll have a net amount. And then potentially, you can answer to the IRS or talk to them and say, "Hey, can we get on a payment plan?" Which the IRS does for a lot, because when you have to pay a lot in taxes, they do allow you to pay over time, but you've got to talk to them and all that stuff.
Yeah, but the interest rates on that stuff is very, very high, dude. Like I postponed filing taxes before, and just that alone will cost you several $1,000s at my level. Yeah. And it's just one of those things. Can I address the Riot thing? I keep seeing somebody wants to know why I like Riot so much.
Yep.
I've been to the facility a couple of times, so I've seen it with my eyes. I've touched it with my hands, and I see the infrastructure there. It's already there. So you're not betting on anything. You're not betting on so many things that have to happen for them to get to their 100 exahash goal or whatever the hell the latest goal is. Like, it's there. They already have the land. They already have a lot of the machines that are spoken for from the company that manufactures the machines and everything. So it's just a matter of execution for them. Whereas with the other miners, they're still trying to work out all of those details, all of those deals. They don't know exactly how much money it's going to take. So we don't know how much more dilution is going to come our way. Whereas with Riot, probably about 60% of the dilution has already occurred for them to be able to have the money to finance all of this infrastructure. So I feel like I know exactly what I'm getting with Riot, because I know how they can get to the finish line with everything that they have in place as far as infrastructure, and I can handle the rest of the dilution because I can calculate it. Whereas with the other companies, there's just more of an unknown for me. And that's the reason that I chose them as my horse. Are they the best in class right now? No. But I think that they will be at the end of the day, and they're going to work on some mergers. They're being very, very aggressive with poor Bit Farms right now. I think they own like 15% of the company. And it's just, but these plans have been in place for a while. And because I've been fortunate enough to visit the facilities a couple of times, I'm hoping that I'm able to get on the next tour visit, because they offer tours there all the time for people. and that they would actually let me go live there and I could do a stream and, you know, kind of do that whole deal. But I've reached out a couple of times and no luck. So they don't know who I am. You know, they hand out hard hats to people when you're there for the tours, and I just walk around and I don't tell people that I own a shitload of shares or anything like that.
Makes
So
sense. Let's go to this question. Can you show us your thoughts when you were choosing a limit price when selling calls and rolling?
So I typically, because I'm also trying to keep the conversation going on the channel and I do a lot of my trading live, I usually pretty much just go like right in the middle. So like if it's the bid and the ask is $60 and $70, I'll usually go like 64, 65 bucks.
But that's where most people get filled anyway, right?
Right.
I mean, it's hard to get that close to the ask because if no one's willing to
Now,
pay
dude,
that
on Charles Schwab, you get better fills, bro.
that is
It
true.
happens.
You do.
It happens. It happens.
But you also pay 65 cents a contract for those fills.
Well, so we only pay 30, but yeah.
On Schwab,
all that's just negotiable as well.
Yeah.
But yeah, dude. So and then they're giving you money on interest. So there's a lot of there's a lot of things, dude. I mean, this game, I'm just a very small piece of a much larger game.
TJ, can we check the hood puts real quick? Because hood just bounced 2220. Just curious where we are on those. I shared your screen already.
Yeah, we're up $100. I mean, we're up $500.
All right, not bad. So we're up 5% on that. Okay, cool. All right, so another question. Baskar says, thank you, TJ and Amit, for this knowledge. I made 5K in the last 2 months using your strategy. Awesome stuff. Amit, what is TJ's YouTube? That's a good time for me to put his YouTube in the chat. So you can check that out there. Why do you prefer to mostly roll covered calls rather than have the shares called away? Are the main reasons taxes and a desire to hold the shares?
That's a real good question. I talked about this on my channel yesterday, and that's why I'm looking to go essentially cash. Because one big thing that I have is I love to buy shares, but I have a real hard time selling them. So I limit myself, right? Like I limit myself to cover calls and upside. So it takes a lot of my options away because sometimes I'm underwater on these shares for a very long time. So that could be perceived as dead money to a certain extent. They're probably right. So I want to maintain more optionality by turning those shares into leaps, having more money that I'm kind of using for cash secured puts, because that's to my strength, because there's usually zero emotional attachment when it comes to a cash secured put, but there is emotional attachment. I'm sorry, I'm having a hard time with that word. There's a lot of emotional attachment sometimes for whatever reasons. I can't even explain it to myself, so I'm not going to be able to explain it to you. But I have no fucking interest in selling my Palantir shares right now. I just don't. I don't have any interest in selling the Tesla shares because that's the only thing that I can walk away from for 3 to 5 years, and it could potentially print money for me. Whereas if I'm just constantly selling cash secured puts and covered calls, that's a job. If I don't do that job, I don't make any money.
Right.
Whereas the shares could work for me. They're like my little soldiers now. And I can go off in the sunset for 3 to 5 years. And if they just follow the market, well, I printed money, and then I can pick up where I left off down the road. So that's why I do like shares to a certain extent, because they don't expire.
Right.
Unless they go to zero, right? But if we're talking about Tesla, Palantir, PayPal, I highly doubt that's going to happen. That's why I'm very careful with the horses that I'm picking, right? I got the 2Ps, PayPal, Palantir, and I've got a very risky play in SoFi, and then I've got Tesla that I don't think is going anywhere, and then my horse, my alternate dark horse or whatever you want to call it is Riot. That's going to be my top 5. Neo, all of those other plays, those are just trades. Those are just trades, but the core position, my Fab 5, if you will, is going to end up being those 4 to 5 companies.
Yeah, and you know what I also think is interesting is like most people say if you're not a good stock picker, then follow the index, right? Because most people can't beat the index. If you do pick stocks, I think another reason learning about wheeling is so important, because if you're going to take the risk of saying I believe XYZ stock will do better for me individually owning the outright equity than the broader index, then you might as well know how to make money on the upside, downside, or when it's flat while it's just sitting in your portfolio, you know? And so I think it's exciting to me if you're going to be an individual stock picker, which is what most people who consume finance content at least are thinking of, to navigate that position in a lot of different ways.
Right.
And, so I think it makes sense. I think it makes a lot of sense.
Right. My
right.
wife is calling me, telling me it's time. Do you want to do the word of the day real quick?
Yes. Let me do.
Do you have other
word
stuff? You gotta do stuff.
One sec. Okay, cool. Word of the day. Let's do that. When are you going to the Marriott? Like today?
Yeah, we check in at like 3 o'clock. Hopefully we can get an early check-in, but they don't usually do those at the island.
Incontrovertible.
Incontrovertible.
Not open to question. Okay, so TJ, you use it in a sentence. What do we got?
Incontrovertible. My knowledge of the will strategy is incontrovertible. Damn it, all cocky and shit. I don't even know if that's the right use of the sentence. I'm just messing with you guys.
Not open to question, inconstitutable. Okay. There we go. So not bad. That's what we got. That's the word of the day. Incontrovertible. Indisputable. I think it is indisputable. It's incontrovertible that TJ has been a beautiful resource on this channel. And he's helped us a lot. So all right, that's it. TJ's YouTube is in the chat right here. Please make sure to subscribe on his channel. I think you can become a channel member for like $3 a month or something. So if you guys want to get some more deep dive and info on his channel, you can be a channel member as well. All right, TJ, this was great. We will see you.
Good, man. Appreciate you guys.
Yes, sir. See you next Friday.
Bye-bye.
Bye. Okay. All right, guys, I'm going to keep the show going, but I have to pee really badly. So let me go pee. While I'm peeing, I'm going to pull up just one video to give us a little bit of more analysis on the macro, and then I'll be back. Still a couple things left we want to talk about. So give me 5 minutes and I'll be right back. All right, here we go.
Tech moves this year. Our next guest says if those mega cap stocks keep rising without support from the average stocks, it would create a durability issue similar to the tech bubble. For technical analysis, let's bring in Ted Sohn, technical strategist at Strategas Research Partners, a Baird company. Great to have you with us.
Thanks,
We've been hearing
here.
that for a long time about this durability issue that's too concentrated, and yet the march has gone on. And yesterday we saw glimmers of hope of some broadening
For the rest of the market.
The
Mag 7 as an index is 30% above its 200 moving average. Mm-hmm. That's pretty aggressive. It's not extreme like 2021 was, but it can create a summer speed bump, especially with the election cycle starting to kick out. You can get corrections during election years. So I wouldn't be surprised if you saw some profit taking, but ultimately the key to this market is the equal weight S&P 500, because when you start to get these big weights, which are so influential now in the S&P 500, without the bench, as I like to call it, you're not going to be able to sustain that. And that's when real issues come through. And so I liked what yesterday had, where you had the large cap names pause, but really good internal strength.
We had, I think, 400 of the S&P 500 stocks actually trade higher today, which is a real positive sign. Yeah. When you take a look at some of the leadership when it comes to the AI trade, it has been semiconductors. And I think what was really notable in the month of June is we saw some really interesting moves, particularly among Nvidia and Broadcom. We saw outside reversals June 20th or so. All
right, guys, we got a little thing we're about to do right now. I came back. I relieved my bladder. We're about to do something right now. So give me a second. I'm about to call somebody up. Let's see how this plays out. This just materialized in like 2 minutes while I was peeing. This is why you always need to have your phone when you're peeing. Shit can happen. So,
hey, how are you?
Hi. So everyone, I'm live on the market open. I've called someone who's named Vlad. He's not Vlad Tenev. He's not the CEO of Robinhood, but he is a guy named Vlad. Vlad, how are you?
I'm good, and you?
I'm doing very good. So for the people that don't know Vlad is a good friend of someone who has become one of my good friends called Derek. Vlad, you have a pretty good relationship with Derek, I imagine.
We're partners.
You're partners, and Derek's told me a lot about you. So this is the first time Vlad and I are talking live, and for the first time ever. And that's because in the past 3 minutes, Derek introduced us because Vlad wanted to do something. And because he's a fan of the channel, which I'm so grateful for, he wanted to do it live on the stream. So, Vlad, I hear you want to buy some shares of Palantir.
I think I do.
So Palantir's right here at 27.86. We've been struggling to get above this $28 range. Do you want to buy 100,000 shares live of Palantir?
I'll start with 50,000.
Okay, so 50,000. So
I'm gonna put in an order right now. 27. What did you say? 86.
it's at 27.86. Yeah, right now.
All right, the order is in.
And we're gonna there's a bit of a wall at that $28 range, so we'll see if those 50,000 shares can get us over the wall. Now, the reason you're able to do this is because you've obviously done pretty well in life, I imagine.
Yes, and I actually already own a lot of Palantir.
I've heard based on my conversations with Derek that you own a decent amount of Palantir. So why don't I ask you about that? Why do you like Palantir so much?
I like the CEO. I believe in the AIP, and I can't wait for the next earnings call. I think this thing is going to definitely about 30. I think 30 is my low, 33 is my high on earnings.
Okay.
I know the fundamentals are not there, but let's see how many clients they sign up.
Yeah, this is really cool. For those that also don't know, Vlad and Derek, they run HubX, and HubX is a very successful company. And Vlad, I believe you're an immigrant and you came to America with nothing. And you kind of, when Derek told me your story, you worked your ass off, and now you've done pretty well in life.
Yeah.
All right, so pretty exciting stuff. So there you go, folks. Vlad just helped us out, bought 50,000 shares live at 27.86. We'll see if that can help break us above that $28 range. Vlad,
let me see if the order filled. Yep, order executed.
Okay, there we go. 27.84. That's incredible. So fun stuff. I don't know if you remember, Derek came on the show on the market open in February, and there was 50,000 shares waiting at that $23 range, and he just bought it, and we bursted into 24. And so that was fun when that happened as well.
Anyway.
All right. Thank you, Vlad. Appreciate it.
Enjoy, guys. Take care.
Talk later.
Bye-bye. Bye.
All right, we'll see if that 50,000 shares ends up helping. So Derek just texted me like when I went to go pee, he was like, "Hey, Vlad wants to buy 50,000 shares live on the channel." I was like, "Okay, let's fucking go. If you're gonna buy 50,000 shares live on the channel, let's fucking do it." So there you go. For those that don't know Vlad, and again, he's not Vlad from Robinhood. This guy, Derek, has told me a lot about him. I think he came from Russia in like the 1980s, and like. If you don't know HubX is a company that him and Derek run together, does a couple $100 million in ARR. They've been pretty successful. He's been watching Palantir since like 2021, and God knows how many millions of shares this guy has on Palantir. So he actually watched the channel a lot. He's been an avid fan of the company. And so let's see if those 50,000 shares ends up helping over the next couple of weeks. His average, I believe, is at like 19. That's what Derek told me. So he's been buying it for a while now. 27.85. At 28, we have how many shares? We have only 7,000 shares there. So I don't think it's even about a wall anymore. It's just about having volume come in. And so those 50,000 shares, hopefully it helps, but we need to get a little bit more volume as we break through. That was 20% of the volume. Yeah. On the day. What's the volume today? Volume today is what? 13.6 million. Yeah. There you go. Shout out to TJ for the $49.99 super chat. Appreciate you, TJ. Thank you for coming on the show. Hopefully you guys got a lot of value from that session as well. Phone Carp and tell him Vlad's buying heavy. Oh my gosh. All right. So see, and this is the thing we were talking about in the morning. When you like get so rich to a certain point, 50,000 shares is nothing, right? It's just how much is that? How much did he spend? What's 50? That's like $1 million, right? 50,000 times 27.85, 1.39 million. Yeah, dude. I mean, like 1.39 million is crazy for someone like me, but for a lot of other people, I guess it's just fucking, it's $1 million. It's not that big of a deal. Sam says I made 25,000 on TNA calls, and I'm going to do another DGen play by buying BitX July 19th, $30 calls. How's BitX doing? The only problem with BitX, dude, is that Bitcoin has to perform for it to move. And so like, if it doesn't perform, you're just screwed on it. Right. So I would give a little bit more time, but I mean, if it's DGen, it's DGen, right? And if Bitcoin moves right before that conference, then it could go up. But if you pick it after the conference, also maybe that expiration is not the worst, because at least Trump might end up pumping it up a little bit as well. Ty says that's why you buy BitX. Well, that's true. That's true. That's why you buy BitX. It is leveraged against Bitcoin. You know, there's a 2x MicroStrategy ETF coming out. It's coming out like next week. And I mean, if you thought MicroStrategy had fucking alpha and leverage, the 2x ETF, I can imagine what that one's going to look like. June says, gosh, and then just go on with your day after dropping $1 million. Yeah, I mean, see, but like Derek and Vlad are the same. I mean, there's like wealth and then there's like wealth, dude. And like, there's certain types of wealth where $1 million is like $10 to you. And it is crazy to say that, but I guess when you get to certain levels, you get to certain fucking levels, right? And those guys have gotten very successful. Derek is working on a lot of new projects. And we were talking about it yesterday. He's been working on it for 5 months. It's starting to materialize now. It is going to be a new company. And so he'll probably come on the stream one day and talk about what he's building, but it's a really, really exciting company. And he's 54. You know, he's been struggling with his health over the past couple of months, but still he's like inspired to like build a new company. And I think it's also because when you get so rich, you get to a point where you're just bored. Robin right here, nice rebound from 2190, and you need some purpose in your life and you need to do something different. And that's why he's deciding to start a new company. So there are some levels of wealth where like all of us, I would assume, are in the chasing wealth part of our life, right? Trying to get to a little bit more financial freedom. When you have so much of it, I guess it's just like, all right, I'll just buy 50,000 shares for fun. I'll start a new company. Like you'll do all these different things to get the high out of life. They have fuck you money. Exactly. They have a lot of fuck you money. And again, the only way you get fuck you money in life is by owning equity in something. You know, they own equity in multiple startups, multiple investments. You have to own equity in something for it to materialize in a meaningful way. It usually doesn't happen through just like a salary or a job, you know, but it is the journey of trying to get there, which makes it fun. Okay. Did you guys see what happened with, actually, no, let's watch this and then we'll go to that. So let's hear from the professor on the PPI data and the CPI data. Definitely interested in his take and talk about a couple of other things. Let's see what Siegel has to say and then we'll go from there.
PPI coming in above, hotter than expected after yesterday's negative CPI print. Joining us now on the markets is Jeremy Siegel, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business, Chief Economist at Wisdom Tree. Jeremy, Professor, it's good to see you. You said that we won't see a rotation into small stocks and value stocks until it becomes clear the Fed's going to cut, and that the CPI, you said this before it came out, could be a game changer. That's exactly what happened. You saw what happened with the Russell yesterday. Now, what is this? 3 steps forward, 2 steps back? What did the PPI say to you?
Well, I think it's 4 steps forward and maybe 1 step back. There's a few components here that do go into the PCE, and it's going to take a little while to suss that out. But I think that the CPI was a game changer. And yeah, I mean, it was last Friday for Scott Wapner closing bell that exactly what I said. And I think the Fed should definitely cut. I mean, not only was it great inflation news on the CPI, which is far more important than the PPI, but let's look at jobless claims. Now, jobless claims were good this week, but don't forget they reported the week of July 4th, which, is always distorted. I'm really looking at it next week because we've been on an upward trend, not only on claims, we've been on an upward trend on the unemployment rate. When we hit 4.1%, we hit the so-called Psalm rule, which says that if the 3-month moving average goes up 0.5%, which it did on the last labor report, the probability of a recession is very high. Now, I'm not calling for a recession, but I'm saying that is on the Fed's radar. So I'm looking at that. I think he's teeing up a cut. I'm just hoping that he'll cut fast enough that he won't go too slow. The way we know he went far too slow on the way up. So my concern is not that he's going to, cut too much, but he might cut too slowly. But the data will tell us what the judgment is.
You don't think before September
No, unless we get a big deterioration. I mean, I'm trying to think that July 31st is the meeting. So we get maybe 1, 2 jobless claims, no other really important indicators. So no, he's far too deliberate, but it'll be a tee up. I think, saying we now see the conditions in place for a cut if the data continue to move in the direction that we are seeing at the current time.
Right.
Of course, the cut is expected to be 25 basis points, but there's 6 weeks until that next meeting, and we'll see whether he is compelled to do more at that time. But that's my expectation for the July 31st meeting.
So not just inflation, but suddenly the what we're seeing in
Slow
the
down the
labor
economy,
market.
because it looks like this half is going at less than 2%.
Yeah.
We were originally excited about, last year way above expectations. The Fed expected over 2% for 2024. Well, the first half looks like under 2%.
And if we underperform on GDP expectations, again, that's another reason the Fed is going to have to cut rates.
And that's below Fed target. So there's many, many reasons. He himself said, we're not going down to 2, waiting for the, CPI to go down to 2 before we cut. That's far, far too late. What was really encouraging, finally, that rental component, which, I've talked about so often, is so lagged in the CPI, finally started coming in lower. And hopefully that'll continue to happen in coming months to keep that CPI rate in line.
So the other mandate's now just as important. It used to be inflation. Now you got to look at both. And the claims number is one way to see it every week. The rotation we saw yesterday, does that continue? You think the NASDAQ is ready for a breather? Do you think you're going to see a move into just the breadth will improve, smaller company stocks will go up, value will go up now? That was the beginning of something yesterday?
And the reason is that small firms are so much more sensitive to the short-term interest rate, which the Fed sets. It used to be called LIBOR, now it's called SOFR. They pay the short rate plus 200 basis points, and all their inventories, a lot of their borrowings are due to that. A lot of the big companies, either pay through equity or fixed in long rates long time ago. Those firms are going to be the most helped by lowering interest rates to the Fed. And I think that's what stock pickers saw yesterday. And, unless we get, some, bad news to the contrary on inflation or too fast an economy, that it could be that yesterday marks a shift finally in the big tech stocks versus the rest of the market. I mean, I've never seen anything with 400 stocks go up in the S&P and the S&P goes down. That's something that you don't see very often.
What he's talking about yesterday is, if people didn't notice, 400 stocks went up yesterday, or like 450 or whatever it was, and the Max 7 went down, so the S&P was down. Like the S&P was down, but hundreds of stocks in the S&P were up, but the main ones were down, which is why the S&P was down. So that kind of is maybe signaling a little bit of a rotation. So let's look at IWM 1.4 up, Nvidia 2.3. So IWM and Nvidia were the same. Then Nvidia in the past hour basically outran IWM. IWM not going red, which is so important. It's maintaining its green. It's just not as green as Nvidia, but Nvidia going green is hilarious because the idea was, well, Nvidia will have some more red and IWM will have some more green, and that's just not what the market is. The market's like, no, we are not letting that happen. We are buying the dip on Nvidia, and if IWM wants to play in the green, they can play, but that 122 dip on Nvidia, it's not going anywhere. So the Max 7 are still maintaining their momentum. Now let's look at the rest of them. Microsoft is down a little bit. Meta was at 494. Now it's at 505. Google was at 185. Now at 187. Basically, Google's flat for the day. Amazon's up. Nvidia's up. And Tesla is up at 3%. Now, what happened with Tesla over the past hour while we were doing the options segment? Elon has tweeted, and Elon's tweets have resulted in potentially people believing that the Bloomberg article is fake. So Elon right here, the legacy media is a propaganda machine. And he's quoting a guy who said the amount of false stories that the media spreads about Elon and Tesla is incredibly high. So he's not literally saying Bloomberg is fake in terms of the article, but he's saying that if you read between the lines, the legacy media is lying. And he's showing some screenshots of Elon correcting Reuters. The only thing here is like, if you corrected Reuters, why aren't you correcting Bloomberg? And maybe it's because Elon just is tired of trying to correct the legacy media and he's letting them just do whatever they want to do. But by saying the legacy media is a propaganda machine and potentially having that event on 8/8, it would be a big middle finger to Bloomberg and all the people that decided to pile into their short if they shorted off this Tesla news that the event is going to be delayed. Tesla right here, 249. At one point, it hit 250, then came right down to 249. But if it closes above 250, that would be pretty incredible. Palantir as well, teetering in that $28 range, 27.94. We hit 28.01. We were at 28 like 10 for a little bit, and now back down to 27.94. And then Robinhood, nice recovery. I mean, Robinhood, the reason I got excited to sell those puts immediately at 21.90 is because every time Robinhood gets to 21.90, it gets oversold and the market knows the catalysts are coming up. There's no point for it to be there. It's either technical, it's either because of Bitcoin. There's not really any fundamental reason for Robinhood, in my opinion, to be that much below 25. So that was a nice dip buy as well, if you got the dip. And we got some momentum there. Vlad just texted. He said, I'm up. He said he's up $745,000 on the Palantir shares he just bought. For those that are just joining, we had Vlad buy 50,000 shares of Palantir. That's hilarious. That's hilarious. That's amazing. Okay, so that's funny. Elon is still stalling to see if he can make 8/8. Now that might be something else that's happening. Elon might be stalling to see if he can make 8/8, which it kind of feels like that's what's happening, dude. Elon's just like, legacy media is a propaganda machine. Meanwhile, in the back, he's like, guys, can we validate this tweet by getting this event to play out? So we'll see if that happens, but not bad for Tesla. Tesla continuing to maintain momentum. Let's get an update on Apple. Bank of America goes bullish on Apple again. They've continuously upgraded Apple over the past couple weeks. Let's see what they have to say, and then we'll go from there.
Yesterday in the red as the Nasdaq had its worst day since the end of April. Senior IT hardware analyst. Wamsi, great to have you with us. Part of this price target raise yesterday was the notion that people have old phones and that they're more likely to upgrade because of AI. And I'm wondering how much of it is just the fact that, whatever it is, 39% or so have an Apple 11 or older, me included, and how much of it is people wanting to get the latest to get the AI features.
Yeah, good morning, Melissa. Thanks for having me on. Look, I just think that it's really interesting. Our survey work shows that after WWDC, the purchase intentions of buying an iPhone in 2024 went up meaningfully. What that tells you is that people were looking for a real reason to upgrade, and you got it through the fact that you now have generative AI coming to the iPhone, but not just that. You also have the cutoff of like upgrades, which is different from what other people have done, right? Like Samsung hasn't instituted this same kind of cutoff at an iPhone 15 Pro Max or at a Pro version. And so it's really giving impetus, not just for the typical cadence of upgrades where the install base is really aged, but also for the newer phone users beyond sort of just before the 15, the 14s and the 13s to actually upgrade a little bit more atypically. So there's a cyclical benefit and a component over here that we're picking up in our survey work, which I think is really interesting to drive upside to both 24 and 25 iPhones.
So that's going to be the thing. Do the banks and their checks on these upgrade cycles actually believe that the upgrade cycle and the supply chain checks for the validation of demand for that upgrade cycle, is that going to play out? Because if it doesn't, then they're wrong. If it does, then Apple probably prints and gets closer to 250 by the end of the year when they release the new iPhone. Tesla 250. Tesla right back to 250. So if you bought the 230 dip, you're up. If you sold puts at 230 for 220, you're up on those pretty nicely. If you sold cover calls at 250, you are drowning on those. So I mean, let's see, but a nice little green candle on Tesla, a series of green candles at that 250 range. which has been fun to see since the morning, or really since last night, since Tesla took a little bit of a breather. How is privacy supposed to work on an AI phone? Yeah, I'm confused about that as well. I'm not sure what the privacy. I'm confused how Apple implements AI in China if all the models are banned. Tesla's trying to get to 251, but I don't know. I guess these are concerns that'll be figured out eventually, and it'll work from there. Palantir right here, 27.96. So we're 4 cents away from Palantir getting there. Vlad just texted me. He said, I'm up $70 million on my Palantir position. That is, and for those, it's not Vlad from Robinhood. It's Derek's friend Vlad, who just came on the channel. Dude, that's kind of insane. He said he's up 70 million. He said, I can't sell because the taxes would be too much, but I'm up $70 million. Like, dude, that's fucking crazy, dude. Like, that's just actual insanity. Like, for someone, like, it's just like these are like hedge fund numbers, and it's like a single person. Like, that's at this point, the bro is just bragging. Dude, I knew Derek was legit one day before. This is when me and Derek were getting to know each other, going into Tesla earnings. Derek sent me a screenshot before third quarter or fourth quarter 2024. This is like January. He bought 200,000 shares at like $220 on Tesla. This is before like the whole thing dipped. And he sent me the screenshot. And I was like, and I had to look at the screenshot. I was like, and I tagged, I was like, did you spend $42 million on Tesla? He's like, yeah. It's like, oh, so there's actual wealth here. There's like real wealth here. It's insanity, dude. I saw the screenshot with my own eyes. I'm like, oh, so people really have money. Like, really have money in this way. And him and Vlad are like degens, dude. They're like best friends. Again, if you don't look up, you guys want to see something? You guys want me to prove to you Vlad is legit? All right, here you go. Here's what I'm about to show you guys right now. This is all public information. I'm just sharing it on the screen. So I think this, maybe you'll believe me here when I say, when he texts me he's up 70 million on Robinhood or on Palantir, he is. This is an SEC filing that just came out a couple of days ago with Vlad's name, who owns 20 million shares. Again, this is the SEC filing of JetBlue Airlines. Like, dude, there are some people that have so much wealth in the world. There's his name, Vladimir Galkin, 20,408,400 shares. This is an SEC document, 6% of JetBlue. So when he says he's up 70 million on Palantir, I don't even think that's like the most he's up on other equities that he owns, because this dude is fucking like, it's insanity, dude. It's just insane, some of the wealth that exists on this planet. And those people choose to allocate their wealth, at least with Vlad and Derek, in the stock market versus that deeply in real estate. So it's pretty crazy, dude. It's pretty crazy. And so this is when I started to realize Derek was like, you know, one of the bigger players. And so when he texted me that he bought that many shares of Tesla, I was just like, dude, that's like, and that's casual. It was casually dropping 40 million, just casually. 40 million on some Tesla, 70 million on some Palantir. Like, it's just crazy, bro. It is just crazy. They worked for it. And see, that's the thing. I think that's the thing about us in the chat. We all agree they worked for it. And, you know, you got a lot of people feeling scared when people have that much wealth because they have too much power. I'm like, dude, I want to have that much power and wealth, so I want to work for it. That's the difference. Wow, Tesla 251, Robinhood 2215, 251 Tesla, Palantir 2794. Where is JetBlue? JetBlue is $6. I don't know what his average is on $6. I don't know if Vlad's underwater or he's making money. I'm assuming he was buying in the fours if he has 20 million fucking shares. I don't know what his average is, but he's up on this one. Bear case for JetBlue. Well, obviously he's buying it because the company's under stress. I mean, I think you guys have seen the headlines. Carl Icahn's getting in. There's a bunch of activist investors, so he's probably trying to get in on that trade. I would imagine the bear cases, and again, I haven't researched it, but their debt, they're a struggling airline in comparison to United and Delta, et cetera. Airlines in general aren't the best business. I mean, even Delta fell 10% after reporting amazing numbers. Delta down another 2% today. So airlines aren't easy, but I guess he thinks the valuation at $2 billion is attractive. I'm not in JetBlue. I don't know anything about JetBlue, but I was just showing that to show that he does have just a lot of money, and he allocates it into equities in a bunch of different ways. Dude, 70 million, dude. It's fucking crazy. 70 million. By the way, did you guys know Carp? I was looking at Carp's share ownership last night. Carp has about 45 million shares of Palantir. So, I mean, if we do the math on that, if I'm not wrong, I might be a little off on the numbers, but 45 million times 27.9. Yeah, Carp's net worth is well above $1 billion, obviously. Same with Vlad. Vlad has 50 million shares of Robinhood, and Robinhood's at 20 or above 20. So he's a little bit at 1.05 billion. So Vlad and Carp have turned into billionaires this year because their stocks have gone above 20. And now it's just a question of if they can, keep going harder from there. He's got as many shares as chest hairs that Amit has. Yes, this is also true. This is also true. Uber. Is Uber down? Uber. Wow, Uber went red when Tesla went green. Dude, freaking hilarious, bro. It's just so funny to me. It's so funny the market really trades Uber and Tesla inverse. Tesla's green, bro. It's up almost 5%. Did a full recovery from 230. It's not at 270 like it was yesterday, but still at 250. Not bad. His name is Vlad Galkin, not Vlad from Robinhood. Vlad Galkin. What else do we have? So that's what we had in the context of Tesla. Okay, now I was going to show you guys this. Did you guys see Biden yesterday? Because this has some implications on the markets given it's the election. Biden had a couple gaffes yesterday. Weren't the best gaffes. I just want to show it if people didn't see it. He called President Zelensky President Putin, and that wasn't the best. And then he called Vice President Kamala Harris Vice President Trump. So here was the Zelensky gaffe.
And now I want to hand it over to the President of Ukraine, who has as much. And now I want to hand it over to the President of Ukraine, who has as much courage as he has determination. Ladies and gentlemen, President Putin. President Putin. We're going to beat President Putin. And now I want.
That was not the best thing to see, dude. That was tough. that was not good. So just objectively speaking, that at the NATO summit, that was not good. And then right here, he called Kamala Harris Vice President Trump, and you could see his senior team when he said that they were not happy about that.
I wouldn't have picked Vice President Trump to be Vice President.
Let me raise the volume. Okay.
I wouldn't have picked Vice President Trump to be Vice President, that I think she was not qualified to be president. So let's start there. Number one.
He was answering a question about someone saying, could Kamala be a president? And he meant to say, I wouldn't have picked VP Harris to be VP if I didn't think she could be a good president. But he said, I wouldn't have picked Vice President Trump to be vice president if he couldn't be so it's like, it just sounded really off. Outside of that, in terms of the actual press conference, I don't think it was that bad. There were a couple gaffes here and there, but he answered decent foreign policy questions well without like struggling to get through his sentences and things like that. And if his performance yesterday was the performance we got on the debate, I think we would have had a lot of less pushback. But it doesn't seem like he's stepping out. And if he's not stepping out, then maybe it really will be Biden versus Trump. I think the markets are pricing in that Trump's going to beat Biden. Every poll is starting to show that as well. And so I don't know, man. It's going to be really interesting. There's a little bit of election uncertainty, obviously, because if Trump wins, maybe his policies are very inflationary. If Biden wins, maybe we have someone who's not the most competent in the White House. So I think the market's trying to figure out like which angle they take, but we'll get more clarity going into September. And we'll have the DNC and RNC in a couple of weeks as well to see who ends up being the nominee and what happens as well. AJ says it was potentially the worst press conference I've ever seen. It was not a good one. I mean, the thing about what they did is the reason they like tried to make it better than the debate is because they called on reporters to ask foreign policy questions, not like questions about his health. And Biden was kind of able to get through those questions. But the questions about his health, there was this weird thing where Biden was whispering as well. Like he would do this weird thing where he started to whisper to give an answer. And it was weird. Like, let me show you. And parts of that also were kind of weird. Here's him whispering when he answers some questions.
You earlier explained confidence in your vice president.
Yes.
If your team came back and showed you data that she would fare better against former President Donald Trump, would you reconsider your decision to stay in the race?
No, unless they came back and said, there's no way you can win. Me. No one's saying that. No poll says that. Okay. Thank you.
This ends tonight.
It was just a little weird, dude. And he did that many times. And yeah, his stare on his eyes were also weird. Again, dude, I don't know. I don't know how it's going to play out, but I'm not saying Trump is like all that much amazing and that much better. And like all of them have their own issues, right? We understand that. But at some level, even the Italian PM was so annoyed at Biden as well. Cause like, you know how you kiss people on the cheeks when you're meeting them? He kind of looked like he was going to kiss her on the lips, even though he probably wasn't going to. But you could tell she was visibly upset if you seen the video. Like he's trying, like it's just a little awkward, dude. And then he was late for the press conference by 2 hours, and they showed the Italian PM who was just like looking at her watch. She was annoyed that she had to wait there. Like it was just stuff that wasn't the most professional. And I don't know. We'll see how it ends up playing out, but. As of now, it does look like it's going to be Trump versus Biden. SoFi at 685, IWM still up, Nvidia 130, Palantir 2793, JetBlue 2% up on the day. It's at $6. Carnival Cruise 1844, Rocket Lab 560. Holy crap! Look at Rocket Lab up 5%, up 5% on Rocket Lab. Well, that's not bad. That's not bad. Amit, just admit you're a Republican. It's okay. I actually, dude, I'm not. I really like. I'm serious. I don't have a political affiliation to a party. I've never thought of myself as a Republican or a Democrat, like ever. I don't know. And maybe if I get older in life, I'll like pick a party. But I think at this point, there are some parts with the Republicans I agree with, like on taxes and stuff, and there's some of the social stuff with the Democrats I agree with as well. But like, so I don't like being boxed into a party. Dude. It just never felt like that's the right way to go around political leanings. So, yeah, I wouldn't say I'm a Republican or a Democrat, but I would say that some of the economic policies from the left have become unattractive to me as I've gotten older. Wow, Rivian's up 10%, 1845. Wow. And that's just because I've become more of a capitalist, right? I'm not Republican, I'm not Democrat, but I am a capitalist. And so being a capitalist means you want certain policies that interact in certain ways, right? And so when I hear you want to, tax unrealized gains, I'm just like, no, dude, like that's just not the thing. And again, I did a 180 because I was a Bernie Sanders dude in high school. And then things change, you like actually have to pay your taxes and you realize, oh shit, like I have to work for my money. It's not just easy to give it away. S&P at 561 as well. S&P does a reverb. S&P just did a total Uno reverse card from yesterday. It was down at 555 from 561. Right now, back at 561. Amit, do you have your own shares? Yeah, I have 25 shares of Rocket Lab. I still have 25 shares, but I didn't add to the position when it was below 5. So, Rocket Lab is just Rocket Lab. It's not really anything in my portfolio. GameStop is green. Wow, GameStop's pumping. This is the everything rally today. Small caps, large caps, Palantir, Tesla. Holy guacamole. What about SoundHound? Is SoundHound running? SoundHound. Wow. 15%. SoundHound's up. Hold on. SoundHound for the week is up $2 from $4 to $6. That's almost 40%. That's not bad. Did Kitty tweet something? Let me check. Did Kitty tweet something? Roaring Kitty, he tweeted nothing. Wow, he hasn't tweeted since June 27th, bro. Damn, I really wonder what is Chewy up? What is the play on Chewy? Chewy's up as well, 2%. All right, so we're seeing momentum everywhere. I'm never running for president. If people are saying, would you run? I'm never running for dude. I wouldn't never want to be the president. Dude. That's such a hard job. Like, I want to make money and like do things in life and make content. Like that's kind of, where my creative aspirations are. Being the president is just like, I forget the president. I've never felt compelled to go into a life of politics. That's never been interesting. Let me know in the chat. Does anyone ever wanted to be a politician? Like I've always just felt politicians don't do much. Some of them, break through and they pass policies, but most people that do things in the world are business people. Like they're people that have influence. They're people that have a level of wealth that gives them power. And then there are people that start companies. And those people have always been more inspiring to me than the, big presidents of our time, like the Obamas or the Reagans and stuff. And those are amazing figures. They just haven't been as exciting to me versus the entrepreneurs. Someone says, dude, I'm so glad I started watching your show. Look forward to the market open and close every day. Thank you for being here. Appreciate you being here and happy you are enjoying the show. Swagnor says, I was up 600% on my Tesla 2026 calls yesterday. I think you'll get back up to that 2026 as long as nothing horrible happens to the robo-taxi. Tesla should continue to materialize right here at 250 on Tesla, and then Palantir 27.97. So Palantir needs about 3 more cents to get back to 28. Make money sound like you should be a senator. Dude, I saw Biden's team, how much money they make. You know, the press secretary, KGP, she makes 180 grand a year. I mean, that's a decent amount of money. I saw the list of salaries. I was reading through it last night. So she makes almost 200 grand to just answer questions every day for an hour. I know I'm simplifying her job, but still, I mean, that's the big part. She takes questions for an hour. She doesn't really answer anything. She says that the president is totally healthy when we know he's not, and she makes 180 grand. So I guess working in the White House has its perks to some extent to be able to make some money. High pressure questions. Yeah. The highest of the pressure questions. Do they eat for free? I would imagine they get free food from the White House, dude. I would think you do if you work at the White House. How many people have been to the White House? I've been there once. I had a tour of the White House. It was years ago, though. It was 2011. So it's been a while. Bitcoin right here, up 2%. So that's nice. GameStop running a little bit as well, 4.2. Maybe that passes 27. Bitcoin 58,259 right now. Amit, you should run for mayor of Atlantic City. That would be not exciting. I would, dude, if I was the mayor, I would be gambling the whole, dude, if I was in Atlantic City all day. Atlantic City is not that cool. I mean, some people think it's like a mini Vegas. It's not really that exciting. I've been there about 4 or 5 times. I don't know, dude. Vegas is more fun than Atlantic City. And this, given I live in New Jersey, I feel like I know a little bit more about it. But I think Vegas is more fun. Yeah, AC is trash. AC is not as fun as Vegas. I want to go to Vegas again. Maybe not this year, but I want to go to Vegas again, and I want to bring money to actually gamble with. I want to bring 5,000 and just tell myself, all right, I either lose this 5 grand but I want to have some fun. I want to have some fun money, and I want to actually win at blackjack because I'm not the best at poker. I understand blackjack. I'm not good at it, but at least I understand it. And I need to watch 21. You guys know that movie right before I go to Vegas, and then just go in and act like I know how to count cards when I don't know how to count cards. I'm from North Jersey and you're better off going to Vegas. Yeah, I would agree. Why is Rivian still printing? I don't know why Rivian's still printing, but it's still printing. Rivian 1844 up 10%. Dude, congrats if you got there. Let me check on remember those calls I would have bought on Rivian? Let's see what they're worth today. So the Rivian spreads that we were looking at 2 months ago. Let's see if now they didn't have a lot of liquidity, so I don't know how much they would be able to pump, but we were looking at December 2026 and we were going to buy the 20 and we were going to sell the 22.5. That today, yeah, the ask is $1.05. They were going for 40 cents, but the bid is negative. So see, sometimes when you sell and buy leaps out into the future, if there's really no liquidity, then it's hard to imagine how much money you could have made on it. But it seems like it would have at least gone up 100%. So we would have been up double on the position if I had got those. Now, if you bought more shorter term, so let's even go to Jan 2025. Jan 2025, if you bought the $20 call, look at that. There's 30,000 of the $20 Rivian Jan 2025 calls up. The volume on those was 2,800 today. Let me look at, I want to see how that one has changed over time. So that Jan 2025 buy $20 call, that's up 40% today. And in the past month, It's up 250%. It's not bad. Not bad. 248%. So whoever, and $20 when the stock was at 10 for Jan 2025 did not look like it was happening, dude. I would not have bought that. That was a scary one to buy. Because you just feel like it would keep burning capital. But then they got 5 billion. So there you go. What's for lunch, Amit? I have no idea. You guys know last night I did not eat the whole day, dude. I was in meetings back to back after the market opened, and then I all those meetings and then market close, which I was late for the market close. But I ate nothing all day. And then finally at night, I finally ate some fish and rice at like 8 p.m. or something. But I haven't eaten today as well. Lucid's up today. Where's Lucid? Wow, Lucid's up 20%. I guess they're pumping on Tesla, Lucid and Rivian together. So nice little pump there. Amit, do you live in North Jersey, Central Jersey, South? I live in Central, basically near Rutgers, New Brunswick. So around that Central Jersey area. I used to live in North Jersey, but then we moved a while ago. I went to school at Rutgers, New Brunswick. That was when I went to college. So I'm actually closer to my old college now than I was before. Are you going to do an interview with your mom this weekend a bit? I mean, I can do an interview with her eventually, but no, I had no plans to interview her this weekend. Wait, let me share something. We should do that interview soon though. Let me share something though, because she would really appreciate this. I forgot she said this yesterday. Let me pull this up. So my mom, speaking of my mom, she started a YouTube channel. And it's really funny because my mom doesn't understand YouTube at all. Doesn't understand what it takes to do YouTube. It's very, very difficult. But she's dapping into it, right? And so she's trying to figure out, trying to navigate it, all this stuff. So she uploaded her first video. So if you guys could watch that video and subscribe to her channel, she has 54 subscribers. Even if you never watch her videos, dude, she would be the happiest person in the world. So I'm putting it right here in the chat. She did a closet tour, a walk-in closet tour. That's my mom. And she did this tour. She made this video all herself. She edited it herself. She's showing her walk-in closet. And the channel is called Life is Awareness. She wants to talk about parenting and all this stuff. Even if you guys have to mute the channel, if you never want to see any of her content, if you just subscribe, dude, she would be the happiest in the world. And if you comment under the video and just I don't know, say say your son is the best or something cute, I don't know, she would love it, dude. She's going to get so many notifications right now. It's going to be blowing up her line. But this is her walk-in closet tour. You guys want to watch a little bit? I still haven't even watched it yet because I've been so busy. We can watch the first minute of it and then we can go from there. But she would go crazy. All right, here it is.
Welcome to Life is Awareness channel, where we're learning and growing every single day here. Today I'm going to take you to an exclusive tour of my walk-in closet. You might have seen closets of rich celebrities, but this is coming from a very simple, ordinary woman who is educated by profession, however, loves to organize. So this closet is my dream closet, not because it has a designer stuff, because I designed and created this whole closet inch by inch, and then I hired Closet by Design to come put my dream into reality. So this is 15 by 17 room in the basement of my house. So today's goal is to take you to a tour and show you.
Then she goes into it and then she starts
Everything decor, everything is going to be in this box. I have boxes dedicated for hair accessories, bindis, verandas, anything that you need.
So now you guys know what our basement looks like. Our basement is literally her playing ground to have fun in this walk-in closet. This was her dream her whole life. So she's been watching this whole home decor stuff on YouTube, and now she wants to be a home decor YouTuber. And it's I'm trying to get her to understand YouTube. Obviously, it's very difficult. She's trying to understand why do I need a thumbnail? She's having these titles, and I'm well, people probably aren't going to click if the title is this way. So she's trying to learn it. And Robin right here, 2227. So if you could subscribe, even if you don't watch the content, it would mean a lot to her. It would be cool. And maybe you actually enjoy some of her podcasts that she comes out with over the coming months. The thing about her, she's really, my mom is super creative. That's where I get my creativity from. But doing YouTube's a different level of like, not creativity, but work, right? I'm trying to tell her it's less about creativity, it's more about work. She's like, well, what if I get the lighting right? And I was like, Mom, you got to get the video out there. You just got to put out content. It's not about the lighting. It's so much more than like making a good video, right? Because she's from a different generation. She's like, well, the video has to be perfect. And I'm like, Mom, there are 2 billion videos uploaded every second on YouTube. Like it's not about the creativity about it as much as it is learning the algorithm and like getting into the feeds of people, right? And you might be saying, oh, well, your mom just wants to create, so let her just create and let her just do whatever she wants. Like, yeah, she does want to create, but she also is complaining that she doesn't have any subscribers. So then you have to show a little tough love and be like, well, the reason you don't have subscribers is because this is how a channel works. And like, it's a whole different ballgame, right? It's a very difficult industry. But she's getting into it, and hopefully she enjoys more. John says, true, admit it's fake bricks, yet it doesn't matter. The bricks are not fake. You guys think I'm gaslighting you, but they're not fake. That thing right there is just part of the bricks. I like etched out a little bit of blue right there, but the bricks are not fake. Nicholas says Amit's still in the closet. That was a good one. That's a good one. That's a good joke. When is Amit's closet tour? My closet's pretty simple. I wear the same shit. I don't really care too much about my clothes, but her closet is like a mansion or something, dude. Even though we don't have a mansion, but it feels like it's a closet that would be in a mansion because she decked it out, completely decked it out. I think she spent like $8,000 on that closet, dude. Like she saved up a lot for it and she made that closet her thing. Robin at 22.27, GameStop 26.47, GameStop trying to get to 27, got hit at 26.89. Rivian 18.21, Bitcoin 58, Tesla 249, now falling from 250, and then Palantir taking a breather here at 27.80 as well. All right, I think that's it for today. Thank you to everyone who subscribed. I appreciate it. She's gonna enjoy it. I'm gonna wait till she sees the notifications. She's gonna be happy. So far, wow, you got her 103 subscribers. Oh wow, 20 comments, dude. She's gonna love it. She's gonna love it. Thank you guys. This is great. She's gonna be so happy. I'll let you guys know her reaction on Monday when she comes up. And I'm not gonna tell her. I'm gonna wait till she sees it because this is the most amount of notifications she's gotten ever. So she's going to be going crazy. Like when she got her 50th subscriber, she's like, look, I got 50 subscribers. And I was happy for her. But obviously there's just so much work you got to put in on YouTube, dude. There's just so much work. How many leather jackets in Amit's closet? You know, I lost the old leather jacket I bought like a year ago. I don't even know where it is right now. The one I bought as a troll on Nvidia. Nvidia went up to like $400 and I just bought the leather jacket. I was like, I should have bought fucking Nvidia stock instead. I wanted to be funny and I bought a leather jacket. But I should have bought Nvidia. We'll do an interview. We'll do an interview eventually. See, the thing about doing an interview, she's going to care about the lighting and her makeup and all this. So she's going to want to like, I can't just say, let's do an interview on Zoom. She's going to like want to do it all professional and stuff. So that's the other thing. It might take some time to get ready to do the interview, but we'll definitely do an interview for her eventually. I can ask her how she raised such an amazing son. That would be, do the interview on her channel. That's a good idea. That's a good idea. And then I could share it. And then people could just go to her channel to watch. That's a great idea. Here's her channel right there in the chat. That's a great idea. Yeah, we could do it for her channel. And then I could show you guys. And then you guys can go there to watch it. That could work. You know, but it is funny though. Like, you know, you're a kid and your parents are giving you advice and you're trying to figure out the world. And now as you get older and your parents want to do something that you are, you know, also doing at hopefully a higher level, they need to like learn from you, right? And so like the tables turn in terms of how it's kind of like the parent becomes the child becomes the parent. And so it's just funny because like it's like she's trying to do YouTube, trying to start YouTube, and we're like having these conversations, me, her, and my sister. My sister's like, you know, like you have a son that like professionally does YouTube like every single day. And so it's like navigating how to work that and how to learn from it. But the thing is, my version of YouTube is different. I cover the news. So it's a totally different world from her version of YouTube. And it's hard to explain. Like her version of YouTube is, hey, I make this video and hopefully like people enjoy my closet tour. Whereas my version of YouTube is, hey, there's this breaking news, we have to cover it. And those are two different audiences that are going to engage with that type of content. And one of those, quite frankly, is easier to get people to engage because breaking news is breaking news. That's more important than like a closet tour. The closet tour, people have to like actually somehow come across your random closet tour on a millions of closet tours that exist on YouTube. So it's hard getting her to understand like those are the nuances of content creation that are really difficult to navigate. But I want her to keep going. And I told her, I think she should make a podcast because she has so much stuff to talk about with parenting and life. And, she's an immigrant from India and what she's done to get to where she's at. So I think podcasts would be better for her. Because, if you find an audience of middle-aged women that want to listen to that stuff, like a Pinterest type of audience, that's a real, there's millions of those women. It's just a question then of working with the algorithm to build that audience. So let's see what happens. My dad is the opposite, dude. He does nothing creative. My dad does nothing creative, dude. My dad doesn't give a shit about creativity. Like, I got some good business sense from my dad because he's very entrepreneurial, but I got all my creativity from my mom. Like, my dad does not care about like painting or anything. Like, he doesn't care about, creating content. Like, he doesn't have the necessity, the desire to create. I feel like if you got to do YouTube, you have to have a desire to create inherently. Even if you're covering the news, you have to have a desire to want to get your ideas and thoughts into the world. And if you don't have that desire, then it becomes hard to even learn the business side of it either. So that's where Mick got his jokes from, his dad. You know what? No, my jokes came from me. I was born with a certain sense of humor. Most people don't understand it. It is what it is. I don't blame people for not getting it, but it is what it is. So that's not from my dad or my mom. That's from me doing what I had to do. All right, we'll end off the stream here. Let's listen to Dan Ives. He just went on Bloomberg. Let's see what he had to say about this robotaxi delay thing, and then I'll get you guys out of here. Here we go.
On this report, he's saying the delay did not change ultimately your bullish call on Tesla. Why not?
Look, it's 2 months. We're not talking 9 months, a year. You'd rather them be what I view as kind of a jaw dropper event. And that's what really needs to happen in October. And obviously the delay is not what you want to see. So no one's popping champagne when you hear that there's going to be delayed, congrats to Ed and Dana on the story. But in terms of the AI story, FSD, the next phase of Tesla, that's unchanged. That's why in our opinion, this is just more an air pocket period to get on to what I view as gold at the end of the rainbow.
Let's talk about some of the golds at the end of the rainbow. Ed, we had seen a run up in Tesla's stock previous week, up 27%. Exactly. We did see a fall yesterday.
Yeah, and look, what really surprised me overnight was all of the retail investor community very publicly on X saying to Elon Musk, like, can you confirm this? Can you confirm this? Like, Bloomberg stands by its reporting, and we always reach out to Elon Musk and any other avenue at Tesla to ask for comment and verify. But Dan, what was it then? I know that you remain bullish on Tesla, but when I said you were coming on the show, a lot of folks in that community were saying, well, explain the 8.4% drop that happened in Thursday's session. Is that just because the run up in the stock that preceded it, or is it because of genuine concern?
No, I think it's more the run up. Look, this is going to be a historical day, whether it's 8/8 or 10/8 or whatever day it's going to be in October. A lot of anticipation going in here. And in my opinion, Tesla's more of an AI robotics play than just an auto company. And investors, they don't like delays because then it feeds into that narrative. And obviously the bears that they focus on in terms of empty promises. And I think it's important, and this is the most important thing, that when they have this event in October, it doesn't disappoint. It shows the path for robo-taxis, shows autonomous, shows the AI vision and monetization. 2-month delay, that's a rounding out relative to where we see longer term. As we've said, I think the AI story alone is worth $1 trillion for Tesla.
Mr. Ives, we always appreciate having you on this program, Bloomberg Technology. You are unwaveringly bullish on everything. And we just showed a graphic with your coverage, right? All the stocks that you are across, 30 buys, 3 holds, and 0 sells. So again, I kind of think, Caroline, what would it take to make Mr. Ives a little more cautious on Tesla? What is it that he would see that would make him rethink his call, Caro? I don't know.
Yeah. I mean, what I'd say, Ed, to that point, look, we've talked, for the last almost 25 years, really pound the table on tech. And of course, we've had bad calls in there as well. But our view, especially where we are, and especially the last decade, but especially the last, I'll call it 18 months, this AI revolution's just starting. So when I look at Tesla and talk about what would make us negative, we talked about a quarter or two ago that Musk needed to step it up, right, in terms of adult in the room. I think he did that. I think deliveries was important for 2Q, and I think you saw a lot of the bears going back into their caves for that. But you need to continue to see demand stabilization, no more major price cuts, and October, you gotta deliver in terms of this next phase of the story, in terms of robotaxi.
I'm really interested by the take that you're like, this is an AI robotics play more broadly. That's certainly what we've heard from Elon. Apple suddenly has got on the AI bandwagon as well. They're also talking up production, at least for their suppliers. That's what we reported yesterday. How are you feeling about the AI play for that big company that you're also an outperformer?
And we've talked, the consumer AI revolution goes through Apple. So when you think about WWDC, and I'll compare it a little to maybe a robotaxi day, that was a historical day. And I think that's where investors started to recognize the keys to that kingdom is Apple. And we've talked about a huge part of what I think, not just the valuation, but catalyzing this next upgrade cycle is going to be Apple Intelligence and AI. And that just speaks to a broader view in tech that we see with Google, Amazon, of course, Nadella and Microsoft, and godfather of AI, Jensen, Nvidia.
Dan, I want to just remind two specific points to our audience that we reported. One is that part of the robotaxi delay was because I think Elon Musk wanted more to show. We said via sources that they wanted to have more prototypes, but they also had some design rethink. And in the same moment, Uber and Lyft jumped 5% in the session. What did that tell you about how seriously investors in the market take Tesla in basically an app-based ride-hailing platform that Tesla might introduce?
Yeah, and I also, Ed, I'd say, I mean, you get an England win and that scoop. It was a good day for Ludlow, right? And I think when you talk about the AI piece, yeah, I mean, I think there's worries about this fleet and what that could ultimately look like for Uber and Lyft. So that negative for Tesla is viewed as a positive Uber and Lyft. I don't view it as zero-sum game. I think some of the negatives specifically on Uber is overdone in terms of what this is going to mean from a robotaxi fleet perspective. And I ultimately believe that's something where like they're going to have partnerships as well, Tesla, when it comes to rideshare. But 3-5 years from now, I mean, there's going to be a decent percentage, whether it's 10% or 20%, that ride sharing will not have a driver.
All right, there you go. Dan Ives, he's bullish, as always, but he also doesn't care too much that Tesla is delaying it. We still didn't get any update by Elon. We'll see, hopefully, by the end of the day. If Elon gives an update, he did say the legacy media is a propaganda machine, so I guess he's implying that it's fake news, but we will find out. All right, guys, let me get out of here. Got to finish a bunch of things. I'll be back at 3:45. I think I'll ask Matt to join me on the market close today because I think he's working from home today. So I'll text him and we'll get him on the market close and get his thoughts on things that are going on. All right. Thank you, everybody. See you in a few hours. Bye, everyone.